age to age he stands.
Our eyes are closed when we start this loop on repeat. Hear my chest, how it beats when you put your hands on me. Time goes fast, but yet so slow. I leave all thoughts, yeah, I let them go. 'Cause I'm here with you, and all I need is you. It's so easy to be us. We lock ourselves up from the world we're lost. It's so easy to be us. We lock
I think about us, I think about us calling. I think about us, I think about us falling. Through the dark night and through time, towards the light when you'll be mine. I think about us, I know the dawn is for us. I dream about us, I dream about the stardust. I dream about us, I dream of how it started, and how it's all connected to everything we'll ever do. I think about what the future's holding for us. I think about the gravity and how you are pulling me. I think about the many ways I am falling for your grace, and of all the possibilities to think that you would be next to me. Think about all the time I think about us. I think about all the time that lies before us. I dream of all the things to come and of all the things we've done. I think about time and how it changes for us. Considering all the stars that came before us, and how everyone has made it for us. Think of the future that has passed, and of all the things that last. Dream about us, I dream about us falling. I think about the gravity and how you are pulling me. I think about the many ways I am falling for your grace, and of all the possibilities to think that you would be next to me, and of all the possibilities to think that you would be next to me. I think about the gravity and how you are pulling me. I think about the million ways I am falling for your
I never thought
I told you every single time, don't you?
we left the room of fight once again, though. Yeah, we said some things we didn't mean, hun. I always start the fight and you put the fire out. I always say too much and I get jealous. I never hear you out and that is selfish. I always start the fight and you put the fire out. I'm sorry for the way we left things, I know you're hurting. I didn't mean to start a war, I'm still learning how to talk about my feelings. You know it is hard sometimes. Maybe I just need some time, some space to figure out how to give my all to you. If you give me one more try, I might just realize that it will always be us two. Maybe I just need some time, some space to figure out how to give my all to you. If you give me one more try, I might just realize that it will always be us two. Always keep my guard up and I'm sorry. I built my walls so high you couldn't climb them, but you're not the one to blame. I know this is all on me. I'm sorry for the way we left things, I know you're hurting. I didn't mean to start a war, I'm still learning how to talk about my feelings. You know it gets hard sometimes. Maybe I just need some time, some space to figure out how to give my all to you. If you give me one more try, I might just realize that it will always be us two. Maybe I just need some time, some space to figure out how to give my all to you. If you give me one more try, I might just realize that it will always be us two. Every road leads me back to you. 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 Maybe I just need some time, some space to figure out how to give my all to you. If you give me one more try, I might just realize that it will always be us two. Maybe I just need some time, some space to figure out how to give my all to you. If you give me one more try, I might just realize that it will always be us two.
I
keep stealing dances, keep cutting in like you own me, then suddenly throw me away. You say we never had a chance, but you keep throwing me these glances, looking like you want me right now, but just like lightning, you're gone. Yeah, you're gone. You're waiting around to go out with somebody, anyone but me. You act like you want me, then suddenly drop me for anyone but me. Anyone but me. Oh, you say that we were doomed to fail, but you still ask me what's the room I stay in. If I didn't know any better, I'd probably give you my plastic key card. You're waiting around to go out with somebody, anyone but me. You act like you want me, then suddenly drop me for anyone. I've thought about giving up, but then you show up and tell me that you've been confused, and that you're sorry for hurting me. Then you change your mind back again. You're waiting around to go out with somebody, anyone but me. You act like you want me, then suddenly drop me. Yeah, you drop me, yeah. Waiting around to go out with somebody, anyone but me. You act like you want me, then suddenly drop me for anyone but me. For anyone but me. be wrapped around your arms instead of being lonely. We could be gazing at the stars, but now it feels just like I wandered off into a room and closed the door behind me. I never gave the key to you, even though I wanted to. I should be trying something new, but now my body's aching. I'm tired of dwelling in the dark, it's just that my heart can't take it. I didn't know what it would cost me when I let you go. I feel alone, and I'm just singing, It should have been you. Another time, another place, I just know. It could have been you. What a crime and what a shame to let go. Sometimes I just don't know what to do. It should have been you. I could be driving to your place, but now the ground is shaking. Could be a phase, but it feels like it will never go away until we make up. I can't be myself. I never knew how much I needed you. It should have been you. Another time, another place, I just know. It could have been you. What a crime and what a shame to let you go. Sometimes I just don't know what to do. It should have been you. It should have been you. I could be wrapped around your arms instead of being lonely. It should have been you. Another time, another place, I just know. You could have been the one who made me feel home. What a crime and what a shame to let go. Ooh, it should have been you. Another time, another place, I just know. You could have been the one who made me feel at home. What a crime and what a shame to let you go. Sometimes I just don't know what to do. It should have been get back again. Cause we had love enough, a bit of time, a bit of love. Now I'm dreaming of peace of mind, getting unstuck. I don't know how to start over with someone else. Thinking of you still making me breathless. We had it good, baby, we had it bad. I let you go, now you're stuck in my head. Like an going down now. Been at it for a while, and I have had enough of this. I doubt that we can solve it. Been trying for so long, and I just can't ignore that it won't ever be the same. No, we will never be that good again. Don't drag it out, skip the innocence. Things will never be the same again. No, I got all that I need. No need to apologize. No, we won't waste any more time. Yeah, I am all that I need. No need to apologize. No, we won't waste any more time. Yeah, you're still stuck on my mind. You won't go away. It's like you are a part of me. The mansion in my dreams. Now you won't be there, and I just can't ignore that it won't ever be the same. No, we will never be that good again. Don't drag it out, skip the innocence. Things will never be the same again. No, I got all that I need. No need to apologize. No, we won't waste any more time. Yeah, I am all that I need. No need to apologize. No, we won't waste any more time. Yeah. All these memories that we've made won't fade away for a while. You said you don't mind, that you'll be just fine. No room for second chances. Hey, I got all that I need. No need to apologize. We won't waste any more time. Yeah, I am all that I need. No need to apologize. I got all that I need. No need to apologize. No, we won't waste any more time. Yeah, I am all that I need. No need to apologize. No, we won't waste any more time. Yeah, baby, yeah. I got all you need. I got all you need. Say,
Guess I'm gonna stay, but I'm just gonna wait in the background, watching you talk to her. I know this might look bad, but I'm just gonna melt in the background, watching you lean into her. I'm a fool. I just wanna get close to you. Yeah, I wanna get close. I'm a fool. I know. Are you thinking about us too? 'Cause I don't know. Are you missing it just like I do? Are you worried about me too? 'Cause I'm thinking aloud, I'm wondering about you, eh?
no shorter. With every hour, every minute of every day. Couldn't sleep even if I wanted to. Need to cherish every moment left with you.
Think we lost all, but who will take the fall? Who will win it all? You know the cost, still you go through walls. Keep on acting small. Even if you got something left to lose, even if there is something left for you to prove, I got bad taste of hanging around you. I'm so sorry about the bitter end. I'm so sorry if I misbehave. In the middle we got tangled up, but in the aftermath of us, I don't regret that much. I don't regret that. Sunny side up, try to keep it cool, bending all the rules, bending all the rules. It gets colder, but I hate being cool. I can't be cruel to you. Even if you got something left to lose, even if there is something left for you to prove, I got bad taste of hanging around you. I'm so sorry about the bitter end. I'm so sorry if I misbehave. In the middle we got tangled up, excuses. I got nothing left to say. Didn't wanna stand up useless, but in the aftermath of us, I'm so sorry about the bitter end. I'm so sorry if I misbehave. In the middle we got tangled up, but in the aftermath of us, I don't regret that much. Don't regret that. Ooh, ooh, ooh. In the aftermath of us, ooh, ooh, ooh. Pretending that I wanted this to happen. I could just say how I feel now, but my tongue is like a wall, keeping words safe in my heart. I can never say them, but I get too far in my thoughts. They take me back to the start, what we were, like we're still all good. I get too far in my thoughts. They take me back to the start, what we were, like we're still all good. You know I miss you the
most when I'm lonely. You know I miss you the most when I'm lonely. It's scary to give in, but somehow love always wins. But then I'm lonely, and my mind doesn't understand. I get too far in my thoughts, they take me back to the start. What we were, like we're still all good. I get too far in my thoughts, they take me back to the start. What we were, like we're still all good. You know I miss you the most when I'm lonely. You know I miss you the most when I'm lonely. You know I miss you the most when I'm lonely. You know I miss you the most when I'm lonely. You know I miss you the most when
Got me up all night, putting things on the side. What do you have in mind? She's awake all the time. What are you trying to find? I hope this ain't a lie. Cause I'm vibing with all we have. Yeah, I'm feeling what we are now. I'm laying down on the ground. All I do is thinking out loud. Yeah, I'm vibing with all we have. I'm feeling what we are now. All I do is thinking out loud. Cause I'm running with these emotions, stumbling out of bed. One hell of a roller coaster, you're messing with my head. I'm ending up so clueless. What are you trying to find? I'm running with these emotions. Tell me, what do you have in mind? Tell me, what do you have in mind? I put my heart on the line through a phone in the night. No, I'm here by your side. So tell me, where are you now? When your head is in the clouds, I wanna find out now. Cause I'm vibing with all we have. Yeah, I'm feeling what we are now. I'm laying down on the ground. All I do is thinking out loud. Yeah, I'm vibing with all we have. I'm feeling what we are now. All I do is thinking out loud. Cause I'm
beginning, it was like we were glued to each other, yes we were. And in a room full of people, we lost our sight. We're only us and no others, only us. But as we dove in deep, the water turned cold. Yeah, we have different dreams, so we can never grow. Yeah, as we dove in deep, the water turned cold. 'Cause we have different dreams, so we can never grow. It's sad to know, it's sad to know, it's sad to know that we'll become strangers again, strangers again, strangers again. It's sad to know, it's sad to know, it's sad to know that we'll become strangers again, strangers again, strangers again. A part of me is living a lie. I want you like the first time when we began. But as we dove in deep, the water turned cold. Yeah, we have different dreams, so we can never grow. Yeah, as we dove in deep, the water turned cold. 'Cause we have different dreams, so we can never grow. It's sad to know, it's sad to know, it's sad to know that we'll become strangers again, strangers again, strangers again. It's sad to know, it's sad to know, it's sad to know that we'll become strangers again, strangers again, strangers again. It's sad to know, it's sad to know, it's sad to know that we'll become strangers again, strangers again, strangers again. It's sad to know, it's sad to know, it's sad to know that we'll become strangers again, strangers again, strangers again.
We both know it's too late, but I think you already know. 'Cause it shows that every time you're around, I try to stay on the low. But it grows, that crazy feeling that I want you here with me. I wanna push it on down, but it will not leave. It's like I'm losing my mind, turning wrong into right. I try to keep you away, but somehow, baby, you're still pulling me in, pulling me in. I'm like a moth to a flame, I should've known better, but you're pulling me in, pulling me in. There's something in those hazel eyes, there's something that I cannot fight. I try to keep you away, but somehow, baby, you're still pulling me in, pulling me in. It's like I'm stuck in reverse, crashing back into you. What's the use? I wish that I could unlearn all the things you would do. Let me lose in that old feeling that I want you here with me. I wanna push it on down, but it will not leave. It's like I'm losing my mind, turning wrong into right. I try to keep you away, but somehow, baby, you're still pulling me in, pulling me in. I'm like a moth to a flame. I should've known better, but you're pulling me in, pulling me in. There's something in those hazel eyes. There's something that I cannot fight. I try to keep you away, but somehow, baby, you're still pulling me in, pulling me in. The harder we fight, we go deeper. It's only a part, we are weaker, so what are we waiting for? I try to keep you away, but somehow, baby, you're still pulling me in, pulling me in. I'm like a moth to a flame. I should've known better, but you're pulling me in, pulling me in. There's something in those hazel eyes. There's something that I cannot fight. I try to keep you away, but somehow, baby, you're still pulling me in, pulling me in.
Sometimes when I'm thinking about us, before we got lost and we parted, back to back we would carry on and we'd do anything for what we started. But this time we could break. I'm running dry, everything's the same. We'll try tonight, this time we're not safe and sound, not safe and sound. What if I'm no good for you? What if you're no good for me? Yeah.
a second, I don't need you. Then why so settled? I withdrew. Still it feels just like I'm waiting for something better. Wait a second, I wanna stay up late with my heart in your head. Maybe stay too much cause you don't understand. You got me gone. You don't understand. You got me gone. But sometimes I might be a bit selfish when you way too humble. Might be overzealous, getting you in trouble. Cause I'm a little bit unsteady, even a little bit mad. Might be a disaster, or just the best you've ever had. Or just the best you've ever had. Cause I'm a little bit unsteady, even a little bit mad. Might be a disaster. When I'm with you, I feel different, like I'm brand new. Let's ignore it. Still it feels just like I'm waiting for something better. Wait a second, I wanna stay up late with my heart in your hand. Maybe stay too much cause you don't understand. You got me gone. You don't understand. You got me gone. But I'm laying down it to compile it. Oh no, I see you only when you're ballin'. Oh no, I don't even care to doubt. I'll see you in a while, 'cause this time I will choose you, yeah. I'll choose. You know exactly how to look like this. Holding in a bag full of goods and needs. I need a night like this. Knowing it's a risk 'cause you're using it. You got all your secrets. I can seem to move this thing. You're pulling me out and I'm right back in the sideline where you wanted me. I'm by the byway waiting for your lead. I don't wanna fall in love like this, but I can't help to fall for you repeatedly. I don't wanna seem to shaky. Oh no, like I'm sudden but I'm steady. Oh no, and they tell me to move on 'cause I deserve more, but still I wanna choose you, yeah. I'll choose. You know exactly how to look like this. Holding in a bag full of goods and needs. I need a night like this. Knowing it's a risk 'cause you're using it. You got all your secrets. I can seem to move this thing. You're pulling me out and I'm right back in. I'm on the sideline where you wanted me. I'm by the byway waiting for your lead. I don't wanna fall in love like this, but I can't help to fall for you repeatedly. I'm on the sideline where you wanted me. I'm by the byway waiting for your lead. I don't wanna fall in love like this, but I can't help to fall for you repeatedly. I'm on the sideline where you wanted me. I'm by the byway waiting for your lead. I don't wanna fall in love like this, but I can't help to fall for you repeatedly. My heart is made of stone. I know it's not my fault. It's just the way it is, love. My childhood was a bore. My feelings got ignored. Now I keep acting out, love. Got me feeling like I stepped on legal stressing on my way to work. My way to work. Smiling like a robot, try my best to cover up how much it hurts. You know it hurts. I'm not coming to your birthday party.
ai hilo ne ka e ha kamana o sweet Amalia o ko aloha ia ai hilo ne ka e ha kamana o sweet Amalia o ko aloha ia nana ke kolohe ki ina I ka liko iwi polena o ka manu o ka uka Aina kapuana ai hilo ne o sweet Amalia o ko aloha ia Aina kapuana ai hilo ne o sweet Amalia o ko aloha ia Nā ka pue o kai ke loa Nene a kai o maui Nā ka pue o kai ke loa Nene a kai o maui Ko me logo ai Hawaii Makaili kai o mamala Ko me logo ai Hawaii Makaili kai o mamala Mana mai hoi ke aloha Kuina nai te atu ai Mana mai hoi ke aloha Kuina nai te atu ai Ai nei a mai ka puana La ka pue a kai ke aloha Ai nei a mai ka puana La ka pue a kai ke aloha Ke aloha Ke aloha Ke aloha e a
Pupu I ka nua E nau e mai I ka mea hou A he aina Mai nā kupuna mai Ala hula puloa He ala hele no ka au pahau Ala hula puloa He ala hele no ka au pahau Nani ka hala He molele I ka mali Kua hiwi ka lana o he wā E ki I hana I ka makani o ka ina E a ka moa e ia au e ke aloha Pupu I ka nua E nau e mai I ka mea hou A he aina Mai nā kupuna mai Ala hula puloa E ala hele no ka au pahau Ala hula puloa E ala hele no ka au pahau Kila kila O pole ano I ka olu Ia home O ohihi a ka mawini E vale ana I ka olu o ke kiawe I ka pā Kolona he a ke kiu Pupu I ka nua E nau e mai I ka mea hou A he aina Mai nā kupuna mai Ala hula puloa E ala hele no ka au pahau Ala hula puloa E ala hele no ka au pahau Ala hula puloa E ala hele no ka au pahau For the people of Eva Beach Nani vale puana hulu I ka iu iu Aina pali kaulana puu kini kini Nani vale puana hulu I ka iu iu Aina pali kaulana puu kini kini Pua
Amnu, oh, Ulu Mele Mele.
They all want to know where the gold is, and they don't want little bits of gold, they want the big bit of gold. More tin. There's a lot of hardship, hard drilling that produces nothing. But it's good if you know that the price of gold is that high.
In normal gold price environments, a lot of these deposits wouldn't get mined, but with the gold price having gone up so much in the last 12 months, it's a completely changed the dynamics now.
Artists do have an incredible imagination that predicts what is to come.
I'm definitely working.
Are you busy?
Oh, yeah, yeah, we've been very busy this year. We've been actually on the phone since February on both sides, both clients, and also to get the supply, which was quite tough earlier this year in terms of the disruption to the supply chain.
Well, absolutely. So you're buying the physical stuff here. So are people storing it? And have you seen any movement of people selling it if they bought it early at the moment? Or is the demand as strong as it has been all year, I suppose, since March at least?
Yeah, demand is very strong. What we see very active trading, both investors that are either increasing their holdings or new to this physical bullion side. We also see some liquidations by clients that bought early on. I mean, to remind you, since 2019, January, we're up almost 50%. So a lot of clients who bought in 2019 are liquidating some of their holdings, either to take cash or to cover for losses and margin calls in other assets. And interestingly enough, what we see some clients that are actually come to us and want to get finance against their gold. So they're not willing to give up the safe asset, but they are seeing some opportunities in other assets, or as I mentioned, they want to cover losses in other assets.
Is it still seen as a haven, or is it people out there who are just having a punt?
Look, I mean, I think last time we spoke, it was right before COVID, and we were optimistic about gold then, and we're still optimistic now. I mean, look, just look what's happening. We have a global recession. We have a pandemic that we're not sure how and when we will be out of the woods. We're not out of the woods yet. If you're looking at the data, we have still all those stimulus plans. We just announced, France announced a big stimulus plan yesterday, which means more debt, more printing of money, mean more continuing of the zero interest rates. You look at all this, you look at the dollar weakening, and remember, gold is, as I said, it's a hedge against all these risks. Investors are concerned. They don't have any better options. So definitely we see more upside.
Right, but we've seen this kind of steady retreat after topping a little over 2,000 a couple of weeks ago. Do you think we've hit a peak for now? I mean, what's your year-end forecast now for the bullion price and for 2021 too now?
Right. So nothing goes up in a straight line. So of course there'll be corrections along the way. We think the quick rally for now is a bit on a recess. As investors, they estimate what the risks and what other options are out there. But definitely, as I mentioned, we see upside as we go towards the end of the year. We need to see what the elections will bring with them. We need to see whether all these stimulus plans actually work. And definitely towards 2021, our estimation is that we're going to get into 2,200 or to 2,300 by mid-year 2021, based on what we see now.
There are still some critics out there about this gold rally. We spoke to one of our frequent guests, Andrew Ferris, a couple of weeks ago, and he said, look, there's zero fear of inflation. There's no likelihood that we're going to see some defaults in the G20 sovereigns. And he says when it comes to zero rates, that's simply just a false sense of drive as they reduce the carry cost. To what extent do you think these arguments are true? I
think very partially. I think gold has, I would say, and we mentioned it before, as an emotional appeal to investors as the go-to when they're concerned, and the price reflect their concerns. So with all due respect, some of the claims are true. We're not sure we're heading to inflation, but definitely there's a lot of concerns. And again, I'd like to remind, we're not done yet with the pandemic. We don't know how the recovery will take place. We expect a very slow and painful recovery as our economies need to adjust to the new situation. Just think of industries that are going to be wiped out or need to change course. So when an investor look at all this, yes, maybe inflation is not the major concern, but that is a concern. And the fact the dollar is weakening and the fact that no other alternatives. The fact that gold is very liquid gives comfort to investors to even to park their money temporarily in this asset and wait for things to unclear in the future. Sorry, things to clear in the future, of course.
I'll take it from there. Joshua, I just want to move now away from gold to silver, which has been the big surprise. Silver has always been this commodity which has been sort of jammed tomorrow. It never quite gets there, but certainly this year it's been delivering, hasn't it? And does it have further to go? Yeah, I mean, let's remember, silver went, the price rallied in August in a very short time span. It went up almost 20%. And remember, when we look at silver, we look both on the industrial use, which is, there's not much demand there, but on the investment side, we look at the gold to silver ratio. And that ratio was very high, which meant that silver was underappreciated, now underpriced. Now, silver tail gold, although in a slower pace. So what happened is silver basically matched the traditional gold to silver ratio, and it's comfortable price where it is now. But if we're right and gold will continue to rally, silver will catch up as we are targeting gold to silver ratio of anything between 60 to 70. Remind you, before the rally in silver, before July and August, before the summer, we had a gold to silver ratio of over 100. Now we're back to around 70, 75. So definitely once gold pushes up, silver will follow right after. Joshua, unsurprisingly, you advise investors to hold 10% of their holdings in precious metals such as silver and gold. Of course, you would say that. The point is, why would I want to store it with you rather than take out an ETF or buy into a company which mines the stuff? Right. So to clear the mining stock questions out of the way, mining stock, you buy stocks in a company, which means it could be a good company, it can be a bad company. You're up to the management, what other activities they have. That's not gold. I agree that this year, the main driver behind the price were the central banks and the ETFs. The ETFs are holding all-time high of almost 4,000 tons AUM now. And I do agree, ETFs are a good, I would say, tactic tool to get exposure to gold. Our concerns in the physical bullion industry, our concerns are two. One of them is the counterparty risk. If you're looking at the long-term holding, why do you really want to take a promissory note by a trust? You need to count on the trust to have a good business. And the second concern is whether the underlying assets is there 100% of the offering. Because I'd like to remind you, in April, we saw the problem in the future market in COMEX in New York. There was almost 5% arbitrage for gold in New York because there was not enough gold in COMEX vaults to supply the physical delivery for the contract. So again, from an investor point of view, do you want to have the physical underlying assets under your name, or do you trust the trust to hold enough gold to allow redemption? Now, it used to be the only ETFs used to be the only way to trade gold. There are great companies today, a lot of options. J. Rothbard is just one of them, but there are other good companies globally that offer clients to buy physical gold and store it, and the cost structure is the same as ETF. So again, I think strategically, holding physical still gives the investors the comfort and the sense of the peace of mind they look for.
Under my administration, we will make America into the manufacturing superpower of the world, and we'll end our reliance on China once and for all. Whether it's decoupling or putting in massive tariffs like I've been doing already, we're going to end our reliance on China, because we can't rely on China. And I don't want them building a military like they're building right now. They're using our money to build it. We'll manufacture our critical medical supplies in the United States. We'll create made-in-America tax credits and bring our jobs back from China to the United States, and we'll impose tariffs on companies that desert America to create jobs in China and other countries. If they can't do it here, then let them pay a big tax to build it someplace else and send it into our country. We'll prohibit federal contracts from companies that outsource to China, and we'll hold China accountable for allowing the virus to spread around the world. Now you can understand why China would much rather see Sleepy Joe than Donald Trump. But as long as I'm president, we will never waver in our undying loyalty to the American worker and to our country as a whole. So, happy Labor Day, everybody.
Some years go down in history as watershed years.
Larry Kudlow thinks that we should be developing a smaller bill, Paul Romer. What do you make of that option of a skinny deal?
Well, you know, I wish we'd had a chance to hear from somebody who was running economic policy for the country rather than somebody who was working on the re-election campaign of the president, because I didn't hear anything about specifics and actions that this administration is going to do or things it's going to push for. There was no
Bill de Blasio has said in the last week that we might not have in-restaurant dining until we have a vaccine, potentially 2021. Tom, can you imagine the devastation that is still to take place in this economy if that's the case, if we can't live with this until 2021?
And I'm going to be blunt to all of you on radio and TV. I'm going to be a pinata on this out on Twitter and emails. John, you and I and Lisa try to keep our opinions out of this. But it is absolutely bizarre to look at the math of cases and particularly deaths and the emptiness of these restaurants, the emptiness of small business.
But that's the reason why.
Well, Tom, let's build on that.
Yeah,
Melbourne, Australia has shut down. Victoria has shut down, Tom, and the lockdown's going to continue off a very small number of cases and deaths relative to what we've seen take place elsewhere. Tom, it's a very crude and ugly story, but it will come down to tolerance. And I just don't think the tolerance is there this time around, the willingness to have another shutdown as we go into the winter. And I want to understand what the metrics are as we pare things back. In the UK, for instance, cases have picked up again. And as I understand from domestic reporting this morning in London, Tom, there's a real conversation about maybe reducing gatherings. But as for locking things down again, nobody wants to go there.
Lisa, one more observation on this, and we've got to get back to the markets. SPX down 40 points. Lisa, the school issue is absolutely front and center. And to me, the single thing not discussed in the media is people with child care. To me, that is every state,
Today
every
we're going
city,
to show
that
you
is
the
the
AI
number one
technology
metric right
that
now.
is able
You're
to
not going to be
transform
getting
any
people
text
back
into
to the
speech
office or
and
back
read
to
it in
work
such a
in the same
natural
kind of
sounding
capacity
way
that they
that
have
it's
been in
tough
the
to tell
past
it was
without that
generated by
exhaustion factor until you have a child.
Tom, it's a very crude and ugly
Again, though,
story,
this is
but
the
it
big
will
question.
come down
I'm
to
glad
tolerance.
that we're talking about the
And I don't
virus
just,
as the backdrop of the
I
markets,
just
because
don't
right
think
now we're seeing the
the
markets
tolerance is
deteriorate
there this time
with a
around,
lack
the
of any
willingness to have
sense
another
of
shutdown as
how
we go
quickly
into
the
the
economy
winter.
is recovering. It's
And I want to
better than
understand what the metrics are as we pare things back. In the UK, for instance, cases have picked up again. And as I understand from domestic reporting this morning in London, Tom, there's a real conversation about maybe reducing gatherings. But as for locking things down again, nobody wants to go there.
Lisa, one more observation on this, and we've got to get back to the markets. SPX down 40 points. Lisa, the school issue is absolutely front and center. And to me, the single thing not discussed in the media is people with child care. To me, that is every state, every city, that is the #1 metric right now.
You're not going to be getting people back to the office or back to work in the same kind of capacity that they have been in the past without that exhaustion factor until you have child care. Again, though, this is the big question, and I'm glad that we're talking about the virus with the backdrop of the markets, because right now we're seeing the markets deteriorate with a lack of any sense of how quickly the economy is recovering. It's recovering better than expected, Tom. But then you also have this question of how long will this last? We don't know. People saying the vaccine is going to come soon. We don't know how quickly it'll be before life gets back to normal after that, if it happens.
On our simulcast radio and television, the market. John, I'm going to look at oil very quickly, tangential to the NASDAQ debate right now. But West Texas just pounded. We had a 36 print moments ago, 37.16. That's a solid 6.6% move, John. That is a plunge in oil.
Yeah, things are breaking down in the equity market too. We've talked about it a lot over the last week. It's happening again this morning in the NASDAQ. NASDAQ futures down around about 325, negative 2.82%, a bit into the bond market. Tom, it's classic risk aversion. I actually asked Larry Kudlow the question directly. Will this market rout shape your effort on the fiscal side? He seemed very comfortable with what was happening in equity markets.
Do you think the president agreed with him?
There is a real belief. We'll find out. I haven't heard the president comment on it just yet, but there's a real belief for them that this economic recovery continues. And in the data right now, you can see it. Andy Haldane of the Bank of England came out with some really controversial comments in City AM this morning, Tom. There's a furlough program in the United Kingdom which basically allows people to continue to get paid to a certain amount of their previous wage, and the government is contributing to that big effort. It's the reason unemployment is still so low in the UK. That effort expires in a month, and the chief economist of the Bank of England is basically saying let it rip, because all you're doing is delaying the inevitable. Now, I don't necessarily share that view. And if Andy Haldane shares that view, then please, him first, take a jump, you retrain, go retrain to do something else. Well, until we reopen this economy properly, Tom, you can't judge what jobs will be gone permanently and which jobs will come back. John, right now we haven't reopened.
John, this is absolutely critical. And Ambrose Evans Pritchard writing this up in the Telegraph earlier this morning. The comfort of politicians, John, to affect austerity, I'm fascinated by with where this global economy is right now.
Bond market's still wide open. Gilt market's wide open. Treasury market is wide open. I'm not saying it will always be wide open, but this is a political decision. It's not an economic one. Right now in the markets, things are still wide open.
Today I'm going to show you how to make a superfood that'll last a lifetime without refrigeration. And it's so nutritious, you'll never...
So tell me what I'm out to do when everybody ate on you. So how am I supposed to feel when niggas trying to scheme on me? Niggas never been real to me. These niggas just make believe. Last night I had a dream. Somebody gave me good time machine. Flew to the
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Longer term is not looking good right now in terms of the support for consumption.
This economy is dynamic, but not dynamic enough.
Doing too little is clearly the problem. It's hard to see what the consequences are of doing too much.
I think we're all focused on that September Fed meeting. We are seeing an income crisis. We are seeing inaction from Washington, D.C., and we can't afford to do this again.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television worldwide across this nation. The beginning of the new year for business. After the summer, the Tuesday after Labor Day marks a new beginning for Wall Street. And John Farrow and Lisa Abramowitz, what a beginning we mark today with new volatility. John touching new lows moments ago on NASDAQ futures.
NASDAQ futures down and down hard, Tom, off by more than 2.8% now, down 333 points. We're still up on the year big time, up on the year by more than 30%. And some of these companies, Tom, are performing really well for a good reason. They've been fantastic through 2020 and way back as well. There are really strong transformational forces that have been accelerated by this pandemic. The stories are really good. It's about the price of the story, Tom. What price are you willing to pay with rates at zero for a long, long time?
What an odd market to see the rates at zero, future a 10-year yield rather in 3 basis points, 0.69%, 30-year bond 1.43% as well. Yields lower, oil substantially lower. It's been off our radar for weeks. $37 on West Texas. Brent trying to hold it at $40.42. And Lisa, the correlations here are tangible this morning, and yet, as you mentioned to John earlier, tons of supply coming on. That's all that new fiscal debt. We're going to see it in moments, right?
Well, we're going to get $50 billion of 3-year Treasuries.
What's the so what on
today.
that?
The so what is that's a record amount. The so what is that this leads off of a heavy supply of Treasury sales this week, and it leads off on another week of uncertainty when it comes to stimulus. We don't know how big the stimulus package will be, so we don't know how much debt the U.S. Treasury Department will have to ultimately sell at a time of uncertainty about inflation, as well as how quickly the economy is going to get better. Tom, just so much uncertainty, and yet Apple shares, the bastion of certainty, down 4.6% ahead of the market open.
No, well done, $2 trillion, and then we go on to that. John, one more question before we get to our esteemed guest, and of course that's the real yield. Look for the real yield, folks, with John Farrow.
Yes.
It shows up somewhere at the end of the week, 3-4 hours. So it's about as long
Early
as
for you this week.
It's about as long as
coming out with a tease, Tom.
Yeah, it's about as long as Milan, actually, when I think about it. The real yield, John, has fallen off the radar. If we get global slowdown, that real yield becomes important.
Yeah, well, there hasn't been a real yield, and that's been the story over the last year, hasn't it, Tom? It's underpinned some of those valuations too. Lisa mentioned the supply. Look at the front end of the yield curve. Your 3-year note right now, the yield, 16 basis points. The front end of the yield curve is still absolutely anchored by the Federal Reserve, and there is no sign that the supply is disrupting this Treasury market, at least at the front end. could develop an argument about the longer end in the not-too-distant future, Tom, but at the moment, it's a Treasury market wide open for more supply.
Some real soup out there this morning, folks. We're thrilled again you're with us on radio and television. Chris Marangi with us with Gabelli Funds, our co-chief investment officer. Chris, I want to start with sort of not the equity hysteria that's out there, but the media angst that's going on right now. How do you define a correction in 2020? Is it down 10%, or is there a new calculus for Gabelli Funds?
This is nothing. Listen, this is healthy. Obviously, the correction is concentrated in a few stocks. Those few stocks happen to have accounted for more than 100% of the gains of the S&P so far this year. So, you know, this is a different correction than certainly we've seen in the past.
Here's a money question for the day, Chris. And when I saw our lineup earlier this morning, when I walked in hours before John Farrow and Lisa Abramowitz, I would want to point out, Chris, that I really went to the heart of the matter, which is how should our listeners and viewers who are not sophisticates in derivatives, how should they adapt to the NASDAQ well, the gamma well? Do they just ignore it?
So I am certainly not an expert on market internals and why the market is short gamma, but it certainly has introduced volatility. It's powered the move up in part, along with a lot of other factors, and it appears to be driving the reduction that we're seeing in futures. So something to understand, be aware of, but at the end of the day, we're looking at the fundamentals of each of these stocks. And as Jonathan pointed out earlier, the fundamentals of those big five stocks have been terrific so far this year.
Chris is just trying to work out the appropriate multiple to pay on some of these companies. Can you just give us some insight into those conversations right now over at Gabelli?
Yeah, that's right. So, you know, in general, obviously, where rates are pinned and appear to be pinned for a very long time, you should be willing to pay a higher multiple for any stream of cash flows. And the question is, you know, how durable are the cash flows of, say, those big five, if that's what we're talking about, and what should you be willing to pay for them? You know, it seems that a year ago, obviously, they would have been at bargain prices. But at this point, the market is making a bet that the durability of that cash will last a very long time, and that they grow, you know, at probably double global GDP growth for the next 10, 15, 20 years. That's a little bit of a harder bet to make.
So are you holding, are you buying, or are you selling into this great dip of 2020, as Tom might name it?
Yeah. Well, we've been buying different kind of stocks. We've been buying the smaller and unloved, what would be considered value stocks. Some of those stocks are still off over 30% this year. In fact, a quarter of the Russell 3000 is still off by 25 or 30%, and that's where we're seeing bargains. You know, amongst the big five, you know, we've owned Google. It's a media, essentially a media name that we can understand. We've owned a little bit of Facebook over time. Haven't owned Amazon. Unlike our patriarch Warren Buffett, haven't been big in Apple, at least on the value side. I think there are some idiosyncratic issues there that we're very careful of, particularly around China. So, you know, this hasn't really changed our view on valuation just yet.
Although at a certain point, it does become concerning from a faith perspective, the idea of what does this do to the marginal investor who has an allocation still in safer assets, who was going to go into stocks, that suddenly sees these high flyers, these staples of certainty being absolutely pummeled, even if it is short term and even if year to date the gains are tremendous. At what point do these become systemic issues? Do they become systemic sell-offs that really infect the other parts of the stock market?
Well, you know, it's a great question. You know, coming into last week, those big five were almost a quarter of the S&P 500. Lots been written about that. It's sort of an unprecedented level of concentration. So if you thought by buying an S&P index fund you were getting a nice diversified set of equities, you may need to rethink that. You know, those five companies not only are a large part of the S&P, but they're all essentially driven by the same kind of dynamics. They're all, even though they're different industry classifications, all essentially internet platform companies, subject to a lot of the same risks. And that's really unprecedented, and I think leaves the average investor exposed to maybe more risks than they were thinking they were taking. Going on right down to NASDAQ, testing new lows on 340 points, 3% move here. John Farrow, I give you great credit for this because I keep talking tech, and through the year, JP Morgan down 24% from the February highs. That shows the damage out there just in the banking area alone.
The banks have struggled through 2020. Jamie Dimon said months ago, and it got everybody's attention, that this isn't a normal recession and we haven't seen the impact of this recession just yet. It might come later this year. Chris, as you look at the financials, how do you think about that?
Yeah, again, these are obviously names that are very sensitive to the shape and absolute level of interest rates, and that's not been a good story for them. Net interest margins were starting to perk up at the end of last year, and now have compressed again, and we don't see them expanding anytime soon. That being said, they're priced for that kind of outlook. The other dynamic, obviously, is a lot of fear that especially came in March about credit. Credit seems like it's probably going to end up a little bit better than was feared, but still, is going to be an ongoing issue for some time as we work through this recovery.
Chris Maranghi, new lows here this morning, negative 3.1%, down 350 NASDAQ points. We break down to new lows right now. When, for you guys, does tech become cheap?
I don't know if I can answer that at a macro level, but we're obviously looking at all sectors. I think there's a lot to like in tech. A lot of those business models, particularly amongst the big five, recurring revenue models, subscription, low capital intensity. These are all things that fundamental investors should love. Again, as you to your point, what do you pay for that? We generally are looking when we're looking at tech. We're looking at technology embedded within other sectors because obviously things like everything from AI to automation, impacting the productivity of those other sectors. And that's generally where we're looking to play tech. We're also playing tech in some derivative manners. The value of broadband has been highlighted through this crisis. You can't get any of those tech services without a fast broadband connection. I couldn't be here doing this without a fast broadband connection. What am I willing to pay for that? I'm willing to pay a lot for it. And so that gives those companies a lot of pricing power. And that's why we like the erstwhile cable companies, now known as broadband infrastructure companies.
Hey, Chris, great to catch up, as always.
Wonderful.
Chris Maranghi there of Gabelli Funds. It started at about 4 a.m. Eastern Time, and it has continued, and we have taken another leg lower, Tom Keene. We are down 3% on NASDAQ futures. If you want to get to single names, stock-specific, Apple in the pre-market, this is a $2 trillion company now, is down 5% and change, Tom, in early trading.
Okay. Keep that chart up, folks. On Bloomberg Radio, I'm going to describe it to you. Not every point, but every point on the intraday chart of the NASDAQ is a series of lower highs through a percentage of the morning. John, the percent tick by tick of lower highs is critical, and right now that is a vector south. No question about it.
A messy start to this morning, Tom, and an exhausting day ahead maybe. NASDAQ futures down 3%. I went to the gym this morning, Tom. 5 a.m. local.
I did not.
Very quiet. Very quiet. They're limiting the amount of people that can go in there. And then after 60 minutes, you have to vacate. They come in, they clean the whole place, and another batch of people come in. 60 minutes, they vacate, you clean the whole place. So on and so forth throughout the whole day. That's how gyms are operating in London now, Tom.
I did 60 minutes.
I just thought I'd let you know, just in case Mrs. Keene is pushing that agenda after 6 months of being locked down.
You mean the pandemic pounds? The pandemic?
Oh, she may or may not have informed me that she's trying to push you in that direction and asked me this morning to bring it up.
Just to inspire you a little bit. Like John Farrow.
Or to try. Just to try. Coming up on this programme, Peter Westaway, Vanguard Chief European Economist. Is that how long it would take to get shredded, Tom? 6 minutes. This is Bloomberg.
Bloomberg has learned that President Trump has discussed spending as much as $100 million of his own fortune on his re-election campaign. It would be unprecedented for an incumbent president to put his own money towards winning a second term. The president scrutinized heavy spending by his team earlier this year. Plus, Joe Biden's campaign and other Democratic entities have been raising more money than the Trump campaign in recent months. Drug makers racing to produce coronavirus vaccines have come out with an unusual public letter. In it, they promise to avoid shortcuts on science as they face pressure to rush a shot to market. The CEOs of 9 drug makers signed the pledge, among them Moderna, Merck, Pfizer, and Sanofi. Meanwhile, President Trump is hinting that the U.S. could approve a coronavirus vaccine in October, just before the election. President Trump is also vowing to sharply scale back U.S. economic ties with China. The president threatened to forbid companies that do business in China from winning federal contracts. Plus, tariffs would be slapped on companies that leave the U.S. to create jobs in China and other countries. The president also said that if Joe Biden wins the election, China would, quote, own the U.S. Meanwhile, China is proposing global data rules to counter U.S. moves on TikTok. Beijing outlined a slate of proposals designed to prevent foreign governments from acquiring data stored locally. The U.S. has accused services like TikTok and WeChat of sharing information with the Chinese government. And shares of Tesla are falling today. The electric car maker was widely expected to be named to the S&P 500 on Friday, but it didn't happen. That may have been because of Tesla's profitability metrics and murky full-year forecast. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lines. This is Bloomberg. This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
We've put ourselves on the front foot again by adapting all the company, by resizing, by adjusting production rates, by adapting the supply chain as well to this new difficult environment.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
We'll end our reliance on China once and for all. Whether it's decoupling or putting in massive tariffs like I've been doing already, and we'll impose tariffs on companies that desert America to create jobs in China and other countries. If they can't do it here, then let them pay a big tax to build it someplace else.
That was not a campaign rally. It sounded like one, though. That was the President of the United States in the last 24 hours, coming out swinging. Here's the price action this Tuesday morning. Let's get you up to speed, shall we? Stateside equity futures lower, much lower. Over the last 4 hours, we just break down. On the S&P 500, down by more than 1% now. NASDAQ futures down by more than 3 percentage points, negative 3.33% and down 385. You see the risk aversion cross-asset into the commodity market, crude lower, down 6%, into the bond market, bid at the long end, curve flatter, down 4 basis points on a 10-year to 0.68%. And into the FX market, Tom, dollar strength, euro dollar, a break of 118 at 117.93.
We're going to do more on the markets here, no question about it, with a real breakdown on NASDAQ in the last moments. Oil, 37.42 indicates all you need to know, negative 6% on West Texas Intermediate. Right now, on the complexities of China, we're really going to rip up the script here, and we can do that with our Chief Asia Economics Correspondent, Enda Curran, who can synthesize for us the domestic Chinese experiment with what we see internationally. And it comes back to the election and Trump and Xi and Beijing and Washington as well. But even further complexed with the release of this movie by Disney. And I go back to last summer where the lead actress of Mulan somewhat came out in support of the protesters that we saw in Hong Kong. Explain the complexity that Hong Kong and the people of China face over this movie in this moment for China.
Well, I think it speaks to, Tom, the ongoing tensions between both Beijing and Hong Kong, like you mentioned, since Beijing started to enforce or assert its territorial sovereignty over Hong Kong over the past year or so by ramming through the very strict national security law and, of course, by the police response to the protests of last year. So I think what you have now is a very divided kind of populace here at the moment, very divided opinions towards Beijing. The local elections that were scheduled to be held for the local assembly were postponed, ostensibly due to the pandemic. But then when this movie comes along, then of course it just kind of adds more kind of pours petrol on the flames between both camps in Hong Kong and just deepens the division between both. And I don't think there's any kind of a near-term circuit breaker in terms of any outreach or olive branches from Beijing to Hong Kong, or certainly even the other way around.
Well, Enda, let's build on that word, division. You used it several times there. Another division is the divide between the U.S. administration and the C-suite in America. The Walt Disney Company, not alone, many, many companies in the United States looking for closer ties with China. How does this administration, if it gets a second term, look to get the C-suite in America to come along for the ride with them?
Well, it's interesting, John, one of the things that came out of President Trump's comments yesterday were some specifics around tax credits to bring American companies out of China and tariffs on companies that are doing business with China and the like. So that's kind of indicating that perhaps there is further to go on this decoupling. But as you know, it's a pretty complicated story because China doesn't just offer a pretty lucrative market, especially in the consumer goods area. It also offers scale for manufacturers, and scale that's still at a competitive price when it comes to manufacturing elsewhere in the world. And I think that a lot of the chambers of commerce will say to you when they speak about this that it's not as easy, it's easier said than done to decouple the world's two biggest economies. I think it will be critical to see what kind of response we get over the coming weeks and months going into the U.S. election and how U.S. companies start to respond to this even more hawkish message from President Trump. But I will say on the Chinese side, they're showing a lot of confidence. Today we had a ceremony in Beijing with President Xi Jinping honoring party members and officials for fighting the coronavirus, and he said that the pandemic once again proves the superiority of the social system with Chinese characteristics. So China's pretty confident despite everything being thrown at it right now.
Well, and they're pretty confident, and perhaps rightly so, based on some of the recent numbers. I mean, the U.S. trade deficit with China reached the biggest since 2018 in August. This indicates to what John was talking about, this division between the C-suite in America and what's happening at the White House. How much have tariffs prevented that trade deficit from being deeper, and how much have they exacerbated it?
You're absolutely right, Lisa. I mean, those trade stats really do speak for themselves. Both the value of shipments to the U.S. and the bilateral trade surplus in merchandise goods were at the highest level since November 2018 in the month of August alone. And, China's export machine has been going gangbusters over the last few months since they opened up, because they've been able to take advantage of U.S. demand for medical equipment. And it's not just medical equipment, but it's also electronics goods. And a few weeks ago, we spoke to toy makers, for example, and they were saying their order books were jammed heading into the annual holiday shopping season in the U.S. So the China export story is very much benefiting from the back of U.S. demand. The tariffs, of course, had an impact around its confidence, and of course had an impact in terms of marginal costs for some of these operators. But, the trade war on the merchandise goods story really has become something of a sideshow to what we're seeing more recently now, which is the moves on tech and the moves on national security, and, of course, the broader tensions over the pandemic. So I think it looks like China is continuing to do well on the U.S. merchandise goods story, even though tensions in the other areas are getting much worse.
Enda, great to catch up. Stay well, won't you? Enda Curran there, Bloomberg Chief Asia Economics Correspondent. The story between the United States and China. Here's the story in the markets right now. Equity futures taking another leg lower in the last 60 minutes. Nasdaq futures at the moment negative more than 3%. Let's pick on a single name. Apple, a $2 trillion+ company. This stock right now down 5.5% in early trading. Tom, the weighting of Apple on the Nasdaq 100 is about 14% of the benchmark of the index. It's roughly half of that on the S&P 500. It's a monster weighting in these indices. And let's be clear here. This is about single names. The option story, it is about single names. And that's been the story, the pain in these single names with massive weightings in the Nasdaq 100, in the tech sector and elsewhere. That's been the pain of the last week or so.
Yeah, John, within the physics of this is the word drift, which is a really cosmic idea in quantitative finance. And the drift of Apple, and to an extent Tesla this morning, again, is a series of lower highs, and it's extremely well contained. I can get the famous surveillance cursor out and tell you that since 4:20 a.m., John, it's been incredibly well contained, showing that unwind.
So, Lisa, how would you describe what we're seeing play out in the last couple of days? The realization that this might have just been one big whale pushing options up, pushing bullish calls on single names to such an extent that everyone had to come along for the ride. The market makers had to buy the underlying. Is it just that, or is it more than that?
I find it really confusing. John, I'm going to be really honest. The market action today is confusing to me. On Friday, we saw a sell-off in treasuries, which people were talking about, the death of the 60-40 portfolio. Today, you're seeing correlation. Gold continues to drift lower as we see stocks sell off. How much can we say that gold has ended its run as a safe haven away from volatility in stocks, John?
Nasdaq futures negative 3.3%. The coverage continues. 1 hour and 5 minutes away from the opening bell. Alongside Tom Keane and Lisa Abravitz, I'm Jonathan Ferro. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Today we're going to show you the AI technology that is able to transform any text into speech, and read it in such a natural sounding way, that it's tough to tell it was generated by a computer and not a real human being. But before that,
De esta manera me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos.
Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esta enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience.
Your latte's ready.
Just the right information.
This Arabica bean was discovered in the 90s.
Too much information.
Nobody likes TMI. That's why TD Ameritrade's learning experience customizes to give you exactly the information you need.
The long weekend is over. Summer's over in the United States and worldwide. In the Northern Hemisphere, that is, of course. I should suggest and be specific about that. I know that some of you out there might tweet me. Alongside Tom Keane and Lisa Abramovich, I'm Jonathan Ferrer. Let's get to the price action of the moment, shall we? Equity futures are grinding lower. A breakdown in the last 4 hours. We are down by 3 percentage points and change on Nasdaq futures. Euro dollar 117.99, coming at 0.1%. It is a stronger dollar story. A bit into the bond market, yields lower by 4-5 basis points. The crude market lower by 5 percentage points. There has been a whale in the options market. Reportedly, it is SoftBank. And Tom, as you know, the decomposition process with whales, the buildup of gas, sometimes they blow up. And I wonder what's happening right now.
I recommend everyone read Fooled by Randomness, a short read by Nassim Taleb. It is absolutely brilliant when volatility hits Wall Street. And right now it's Fooled by SoftBank. Right now, the conversation of the day for those of you worried about fiscal dynamics. John Farrell's going to dive into the German view. I'm going to look more at the global view, and we can do that with Peter Westaway of Vanguard, their chief economist with prodigious math abilities out of York and Cambridge and operational research. Peter, the dynamics of this debate is wrapped around culture, which is austerity is good. Have we slipped away from the belief of the last number of years that austerity is a good and beautiful thing in a slowdown?
I think we have definitely slipped away from that. I mean, I'm not really convinced that was ever the economics mainstream, but it was certainly the policy mainstream. In Germany, that was very much the view, and that's why we've seen relatively tight fiscal policy there. But I think here in the United Kingdom, the appetite for austerity to get the debt levels down is something that we're not going to see for a while yet. I think the mood of the new government in the UK, and perhaps more broadly in Europe, is for much looser policy, perhaps just living with higher levels of debt. Let's not forget that the interest rates at which much of this debt is being funded during this pandemic is incredibly low. And so the burden that it's going to put on countries isn't going to be as great as it might have been in the past. But John, at some point, it's going to have to be paid off.
Yeah,
and,
John Farrell, we hear...
Really what...
Well, I don't mean to interrupt, but John, I think this is really the heart of the matter, is a low-yield environment's a free pass.
So far at least. And when you use that language, Peter, that at some point this will have to be paid off. What does that some point look like?
Well, I think at the moment it's the last thing on the minds of governments because they're still up to their ears in coping with the pandemic. I think when and if we do get to this point when economies start to recover much more quickly, when the tightening cycle begins again, and again, we're a long way from that yet. At that point, I think the conversations will start to be about, well, what are we going to do about fiscal policy? Are we going to tighten policy? It may be, though, as I say, that we'll just learn to live with this and perhaps, this idea that some of the debt will just effectively be monetized. Let's not forget, many of the central banks are sitting on this debt. At the moment, it's not really putting a burden on the government because the debt interest is being paid by the Bank of England, effectively. So at some point, QE has to get unwound. That's what makes it QE. QE means that the debt eventually gets sold back into the private sector. When it's not sold back, that's when it's called monetary financing. And if you think of the history of QE, Japan, Europe, even the US to an extent, a lot of this QE is still sitting on banks' balance sheets. So we haven't really seen the cycle of QE play out yet. And so we don't really know how it's going to play.
Well, that's QE forever, isn't it, Peter? You just keep reinvesting maturing assets. Yeah. You keep doing, you never forgive it, so technically it's not financing. There is another issue here, and it's not just the crisis response, Peter. It is the permanent change. That's what I'm interested in. I think we can all get our hands around what the crisis response looks like. We can see it in the last couple of months. Permanent shifts in the framework at the Fed, permanent fiscal changes in places like Germany. Can you speak to that for us, Peter?
Sure. I mean, let me start with, as a former central banker, let's talk about what the Fed have introduced, this idea of average inflation targeting or price level targeting. I mean, at the moment, it's still not completely clear what they're going to do. I think the key message is that is going to facilitate easier monetary policy for longer. Personally, I'm a bit of a price level targeting skeptic. I think it's a difficult thing to carry off, to start worrying about inflation bygones, but that's really where we're going with that. Sorry.
So,
as far as fiscal policy is concerned, I think we are in a new regime because I think the idea of getting debt down quickly, the way we did after the financial crisis, just isn't palatable. I don't think it worked very well for countries like Europe, and I just don't think the political appetite for that is there anymore. There's just too many other political problems around the distribution of income and so on that makes fiscal policy and fiscal austerity just not a palatable policy option.
Meanwhile, they've got a partner in the central banks. We do have that ECB meeting on Thursday. Meanwhile, the Bank of England, which you were a member of, has considered or talked openly about negative interest rates. Do you expect that to be a tool used by them in the not-so-distant future, especially given the fact that there really isn't an easy pathway to paying back some of the debt?
Yeah, they've left it all open for negative interest rates. But, I mean, even back at my time at the bank, over 10 years ago now, the idea of negative interest rates wasn't looked on very kindly. So I think they've probably got more work to do on QE before they go down that path. But I think they could do it. But I think we're getting close to the end of the road for negative rates for the ECB. I don't think rates can go that much lower.
Wait. Hold on one second. Peter, hold on one second. And I'm sorry to interrupt, but that's a huge issue. Right. If you're saying that they're getting close to the end of the road with negative interest rates, do you think that they are going to, at some point in our lifetimes, move to a positive interest rate regime?
No, I don't mean they're going to reverse it, but they're going to keep the rates at the very low negative levels that they're at. And I think they will carry on putting QE into the system to push down yields, to ease monetary conditions. I think the big policy constraint question for the ECB is at what point do they run out of government bonds to buy, and will they have to start breaking their own rules around which bonds they're able to buy? That for me is the big question, rather than whether they're going to go a lot more deeply into negative territory. So I think at the end of the day, especially for an economy like Europe's that's so dependent on the banking system, you do start bumping up against this so-called reversal rate, where actually negative rates start to do more harm than good.
Peter Westaway with us on Bloomberg Radio and Bloomberg Television. Welcome all of you to our simulcast this morning. Lisa Abramowitz, Jonathan Farrow, and Tom King. We're looking at the markets tick by tick. We'll get to that when we're done with Dr. Westaway. Right now, all you need to know, futures negative 46. It is pretty tough out there this morning. Dr. Westaway, to sum all this up, and when you look at the fiscal policy right now, it comes back to aggregate demand. We're seeing in oil this morning a real global issue of demand. Would you suggest that demand is threatened into Q4?
Well, I think the big question in Q4 is really the same question we've had for the last 6 months, which is what's going to happen to the virus, what's going to happen to the policy, the consumer response to that. And at the moment, consumers, firms are still very tentative about going out and spending money. And so we do have this aggregate demand shortfall, which is where the fiscal policy is piling in to try and replace that spending. And really, it's a bit different, this fiscal policy support, because what it's really doing is it's providing income to people who are out of work. So it's not so much about getting people out spending money that they otherwise wouldn't have spent. It's actually just propping up their income. And as long as people are out of work or on furlough, there's going to be a need for this. So I think the difficult question is going to be, if the virus drags on into the first quarter of next year, as it easily could, is it really feasible that governments will carry on giving this exceedingly generous income support to workers who haven't yet got back into work? I think they're going to have to, but it's going to really put a strain on the dead.
Peter, great to catch up. We've got to leave it there. Peter Westaway there of Vanguard. We are 51 minutes away from the opening bell in New York City, and the price action cross-asset worldwide shaping up as follows. NASDAQ futures right now down more than 3%, just off session lows. A breakdown that started about 4 Eastern. We're down 370, negative 3.2%. And you just see that risk aversion, cross-asset into the FX market. Stronger dollar, euro dollar south of 118 in the bond market. Bid at the long end, yields lower. 5 basis points, a 10-year 0.67%. And a rout in the commodity market. Tom, crude with a 37 handle. We're down almost 6%.
Crude's not a small item with Brent crude, that global price, $40.47 per barrel. John, I'm looking also at something that's linked up in the last half hour or so, and that is the Standard & Poor's 500. This is a different index dramatically than the NASDAQ 100. I'm not sure if we have that chart for Bloomberg Television. I'll get it out for Bloomberg Radio. But, John, we're really beginning to break down off the recent lows that we saw on the S&P futures.
It will be tough to see a rotation in today's session, given the bond market action, Tom. A flatter yield curve. I think if we saw higher yields today, coupled with tech lower, the financials might do some of the lifting. You might see some of the cyclical elements of the market doing some of the lifting. But right now, with Apple, which is a massive weighting, of course, on the NASDAQ 100, about half of the weighting on the S&P, given the broader index, but still a big weighting, down 5.5% in the pre-market. It's going to be a big drag on the S&P 500 as well.
And, John, I want to review here. I think this is so important, folks. Just the basic idea. It's SoftBank, widely presumed to buy a lot of call options, and then the dealers they deal with have to react to that with derivative hedges. And then when the trade's over, you have to unwind the hedges. Is SoftBank hopefully unwinds a trade? And Lisa, as you mentioned in an early morning note, this is before Farrow was out of the gym. Lisa, you mentioned this morning that SoftBank equity shares have already been hit hard, even as they try to unwind this success.
And even though they've actually posted a profit, according to the Financial Times, on their positions, they're still getting hammered by people who are concerned about what they are. I'm struggling, though, to find a narrative that really explains today's action. Perhaps that's why people are blaming SoftBank, John.
Don't look for one, Lisa. Maybe that's the lesson of the last month or so. Seriously, just don't look for one. So many people spent the whole month of August trying to come up with reasons for why the market was higher. And I think the last week has just embarrassed everybody who did have this strongly held belief as to why things were higher. Equity futures down a little more than 3% on the NASDAQ. Yeah, that dollar weakness not there this morning, Tom. This is Bloomberg Surveillance.
With the First Word News, I'm Kaylee Lyons. Bloomberg has learned that Donald Trump is considering an unprecedented step for an incumbent president. He's discussed spending as much as $100 million of his own money to win the election. The president has been scrutinizing heavy spending by his team earlier this year that failed to push him ahead of Biden. Plus, Biden's campaign and other Democratic entities have outraised the Trump campaign in recent months. Meanwhile, President Trump is threatening to curb the U.S. economic relationship with China, and he's promising to punish American companies that do business there. The president's calling on those firms to be banned from getting federal contracts. He also wants to impose tariffs on companies that leave the U.S. to create jobs in China and elsewhere. President Trump said that if Joe Biden is elected, China would, quote, own the U.S. In California, the electricity crisis has gotten worse. The state's biggest utility says it expects to cut power to 500,000 people this week to prevent live wires from sparking wildfires. Last week, the problem was a heat wave. This week, California is expecting high winds to come sweeping off the Pacific Ocean. And Kamala Harris made her first solo campaign trip as the Democratic vice presidential candidate. She went to Milwaukee, where she appealed to communities of color that will be crucial to winning the battleground state of Wisconsin. Harris met with black business owners as well. She also talked with Latino activists who advocate for frontline workers. Global news 24 hours a day, on air and at TikTok on Twitter. Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lyons. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on so you can keep on.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind the...
Starting out with any new project management software usually feels something like this. Where do you even start? Well, you've probably got some to-dos written down somewhere, right? Let's drop those in here. There we go. Let's give these some due dates in the order they need to be completed. Sure would be helpful to have these all mapped out on a
phrase, what's wrong with everything about Trump's presidency. The K means those at the top are seeing things go up, and those in the middle and below are seeing things go down and get worse.
Joe Biden, Democratic presidential nominee over the weekend, and a shout out to Peter Atwater as well, who I think messaged me several months ago talking about the K-shaped recovery, and that was the first time I'd come across the concept. I think we had an economist from Berenberg in the last day saying how much we've abused the alphabet as far as this recovery is concerned, Tom. On the tech sell-off, Dan Ives of Wedbush, a conversation you don't want to miss. 9:30 Eastern, Bloomberg TV. The countdown to the open commencing in 12 minutes' time, Tom. Looking forward to that.
Really looking forward to that, and that dovetails into what Chris Marenghi said, is keep your eye on the fundamentals. Okay, so we've corrected, or maybe if you have no sense of history, you'd call it a correction, but maybe it's not. So on radio and television right now, we're going to frame all of this with Barry Ritholtz. We can do that not only with his wonderful book of years ago, what he's writing for Bloomberg Opinion and on his podcast, but Ritholtz with a great sense of history as well. Barry, I want to go to Nassim Taleb in the wonderful character Nero Tulip in his book Fooled by Randomness, who's completely taken in the opening of the book by the red Porsche the guy is driving. We have had a red Porsche market. Everybody's been able to afford red Porsches with the market up, and away. And we nudged down 5 or 6% and the world's coming to an end. What's a real correction look like?
How soon they forget, right? Let's put some numbers on that. Since all of this energy, or most of this energy, has been taking place in the big tech stocks, let's use the NASDAQ 100 as an example. In the March lows, it was barely over 7,000, and it peaked in August at 12,400 and change. That's about a 77% rally in less than 6 months. So straight up for 77%, I think a 10 or a 15 or even a 20% pullback is certainly overdue. And profit taking is probably the most abused phrase in all of finance. But in this case, it could legitimately be people who bought in March, April, May saying, all right, I got a huge profit. Maybe I should ring the bell and take a little something off the table.
Barry, do you buy that SoftBank is causing the sell-off?
About as much as I buy the fact that Robinhood was driving the market in the first place. Look, they're $100 billion funds. Most of that money is tied up in pretty illiquid long-term investments. So if they want to fool around, for lack of a better phrase, with a couple of $1 billion in options and derivatives, they could move a handful of stocks for a little bit, but that ignores the fact that you've just had a massive move across a lot of big companies that are actually doing well during lockdown. Right. They're doing well because they have global exposure, and they're doing well because they were built for work from home pandemic circumstances. So I'm not buying the SoftBank whale story at all.
Okay, so here's the question. I was asking John, I said, I'm not seeing a narrative here. What's the narrative? And he said, don't look for one. There hasn't been one. August was the problem when people were trying to find one. That's what we've learned. And here we don't really have a cohesive narrative to explain it. It's more randomness, to your point, the fallacy of a narrative. And yet, what undermines this idea that you buy the behemoths, you buy these cash fortresses that will continue to do well in a tech-driven economy? Why not just buy now, given the fact that they've come off? I mean, have we really upended our questions about how to fundamentally value these companies?
That's a really challenging question about valuation for a couple of reasons. Clearly, valuations have gotten extended. And the prior narrative, the prior narrative before the whale narrative was stocks and investors are looking over the valley of 2020 to the recovery in 2021 or perhaps 2022. One of the few narratives that makes sense is Tesla was running up in anticipation of being added to the S&P 500. And when that didn't happen because of supposed profit and revenue reasons, that sell-off, okay, I can accept that. I could buy into that argument because there was no indexing coming in to make up for the lack of purchases. But the problem with narratives, especially after the fact, hindsight biased driven narratives, is they ignore how random so much of the market action is. Right. And if it was easy and predictable and foreseeable, well, hey, we'd all be wealthy. But the randomness is what makes it so challenging. And people who are uncomfortable with randomness spend a lot of mental and emotional energy looking for a description and a storyline that makes them comfortable. Humans are terribly uncomfortable with random outcomes.
Barry, one of the great things here in the derivative markets, and again with SoftBank, is if you issue the call, there's the put, et cetera, the right against the call. Fine. Do you just assume there will be losses if SoftBank takes a gain of X billion dollars? Do you just assume there's a prescribed sum loss against it by global Wall Street?
Trading is essentially a zero-sum gain. So for every winner in a trade, there's a loser. The exception being not the traders, but the investors who are allowing compounding and the passage of time to work in their favor. If someone sold something at 10, 20 years ago, and today it's being the person who bought it is selling it at 200, that's not exactly a zero sum. But if I'm a buyer and you're a seller, and then tomorrow I'm a seller and you're a buyer, net, that's going to flatten out to zero minus whatever the trading costs are. Wisdom,
Barry Ritholtz, can't wait to see you write on this. Barry Ritholtz writing for Bloomberg Opinion, of course, and with Ritholtz Wealth Management as well. Lisa, on SPX, we're down testing new lows. We'll see if we get there. We'll have it for you on Bloomberg Radio and Bloomberg Television. Down 3% on NASDAQ. And, I look at the motion this morning, and it's highly unusual, Lisa. It's well contained, and yet a set of lower lows and lower highs.
Yeah, and you talk about contained. It's contained to several names that are leading the declines. Yeah. Tesla shares down more than 14% in pre-market trading. Apple shares down 4.5%. Amazon down almost 4%. Again, this raises a question: how do people fundamentally value these companies at a time when they do have very solid balance sheets, and yet they have been bid up so much, Tom?
Well, it'll end up on the performance of the companies, and we'll see that as we get through earnings. Yeah, if we get through earnings and we get through conference calls, there'll be a reaffirmation of those stories if that is the case. I'm not giving an opinion.
But my question is, does that justify where valuations are if they give that solid cash flow?
The market justifies where they are. I quoted Paul Samuelson this weekend from 1948, folks, on a bull market makes its own hopes. I'm paraphrasing there as well.
Well said.
It's good in this hour to end with Paul Samuelson, the original laureate. Please stay with us through the day on Bloomberg Radio.
Today we're going to show you the AI technology that is able to transform any text into speech and read it in such a natural-sounding way that it's tough to tell it was generated by a computer and not a real human being. But before that, let me tell you something. Videos without a good voiceover will
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is a step in the right direction. Perhaps it's a harbinger for more changes in the future, like the completion of the banking union.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it. That makes me confident that we are going to do everything we can to determine safety.
Give you a sense of the real-time action, the 10-year yield tumbling now 11.
Managing your projects should feel more like this. That's why you need ClickUp. With ClickUp, when you want to assign a task, you task it. If you have to adjust your timeline, you change it. If you need to show your progress, you upload it. ClickUp is already used by thousands of the most productive teams out there and has over 5,000 five-star reviews. So get less of this and more of this. Less of this and more of this. Less of this, more of this. Try ClickUp free, forever.
Today I'm going to show you how to make a superfood that'll last a lifetime without refrigeration. And it's so nutritious, you'll never have to stockpile.
The tech trade is over, I'm not so sure.
US equity outperformance has been driven largely, against other countries, has been driven largely by tech.
Liquidity is still plentiful.
The rotation towards more cyclical stocks may therefore be overdue.
There's going to be headwinds for them.
Tech actually accounted for more than half of the overall inflows.
I wouldn't be chasing a cyclical rotation.
What a start to the trading week in the United States this Tuesday morning. Let's get the price action on the screen. Equity futures breaking down by around about 2.8% on the Nasdaq 100. With the moves, here's Scarlett Fu. Hey, Scarlett.
Hi, John. Well, technically, it's still summer for another 14 days, but it doesn't feel like it because with the tech sell-off, we get a stark reminder of all the worries that investors face as we approach the end of the third quarter. The market's biggest winners finally seeing a pullback after defying gravity for so long. The Nasdaq set to underperform the broader market for a third straight session. That rally got extended, and it masked a lot of the other risks lurking out there under the surface. There's still no fiscal deal, first of all. Congress arguing over the fiscal stimulus. We got the latest jobs report, and it showed an addition of 1.4 million jobs in August. But we saw a steady increase in the number of people who are unemployed permanently. Since the start of the pandemic, a lot of companies were furloughing workers so they could collect benefits. Look at the airlines, for instance. They say without more government aid, those cuts could become permanent. We're also dealing with election risk. We're 56 days out from the election. The rhetoric is heating up, especially when it comes to U.S.-China relations. And, of course, we got a taste of it this morning. President Trump considering a ban on cotton imports from the Xinjiang province of China. Volatility markets, as you can see, pricing in larger moves in stocks. The October futures contract, that's the white line, covers the election, and it is more elevated than the other contracts. And of course, finally, with apologies to the Starks, winter is coming because being stuck indoors and the flu season coming back, that means another wave probably of the coronavirus. An approved vaccine doesn't change the outlook either because it'll take time to scale and distribute the treatment. John?
Scarlett, looking at the price action today and the moves through August, many people looked for that narrative to explain what happened in August. And now I imagine a lot of them feel embarrassed, given what we've learned in the past week or so. Can you reduce the moves we've seen, not just in the last couple of days, but in the last month, just to SoftBank behaving like a hedge fund?
I mean, there's a temptation to do that, but it's probably too simplistic. SoftBank was probably one of many investors who plowed in to the market and piled in on the call options, those bullish options, but it probably wasn't the only one. We know retail investors were pretty hot and heavy into those big cap tech names early on in the recovery in March, in April, and in May. So someone like SoftBank, a potential NASDAQ whale, probably exacerbated the situation, but probably isn't responsible for all of it. That's just my take. We're, of course, still trying to find out more information about this, but that would be the early read.
Scarlett, thank you. We'll catch up with Scarlett a little bit later this hour. 27 minutes away from the open and Bow equity futures breaking down. NASDAQ 100 futures down by 2.9% off session lows, but still down and down hard. The move started about 4 a.m. Eastern, and we have just gone lower, lower, lower over the last few hours. Looking forward, Chad Morganlander of Washington Crossing Advisors staying underweight growth and tech stocks, writing the following. Valuations on leading tech names are overextended. Investors are torturing the numbers to make the math work and justify their price targets. One should look towards high-quality value companies as a reasonable investment choice. Chad joins us now for more. Chad, this is the story for me. Trying to justify the unjustifiable became an industry in and of itself in the month of August. Are we doing it again?
Well, it's based off of a similar 1999 market move. And you have just a handful of really good companies, but the valuations are absurd. And what's happening is analysts are taking out their expectations out many, many years. So, okay, you got a great company, low debt on the balance sheet, but they're artificially inflated. They just need to be revalued lower. So we're advising investors to look at other types of sectors like industrials or healthcare, and to just not sell the market off altogether, but just be a little bit more pragmatic with the investments that you're making and the expectations you're making in the later years.
Well, Chad, let's split up your argument into two. The first point, that some of these names in the tech space have been overextended and we need more realistic valuations. The second point being where you want to put your money, and that's elsewhere. On the first point, what is the appropriate multiple on a company that in a complete shutdown in many parts of the world economy managed to mint money? In a world of zero rates, what is the appropriate multiple on that company?
Well, you know, it all depends based off the growth rate and the predictability of that free cash flow. But going out 2 years and having a multiple in excess of 40 or 50 times, to me, is a little bit too high, especially when you could see very good quality companies in the industrial sector post-pandemic that are trading at market multiples or 10 or 11 with very little debt that should do quite well, that have tremendous earnings potential 5 years out. So again, these are not bad companies, the ones that they've marked up. But yet, you know, you're at nosebleed territory, so we're advising investors to trim that back. You don't have to sell everything, but to trim that back and to start to cycle into some more companies that are more sensible from a valuation perspective.
One single name getting a ton of attention this morning. Apple down by 4.6% in the pre-market on the year through 2020, up by about 65%. An Apple bull, Dan Ives of Wedbush, joining us a little bit later this hour. Let's talk about elsewhere. Chad, it's going to be a difficult morning for the market, with tech doing what it's doing and the bond market doing what it's doing. And I'm thinking about the financials at the moment. How do the banks start to get a new lease of life in America with rates where they are, Chad?
Well, the story there is about the behavior of the yield curve. And if you're looking out a year and a half and your base case scenario is that the economy will continue to improve based off of a solution regarding the healthcare solution on a global basis, then you should see a modest steepening of the curve, which would be a great tailwind for financials. That, to us, is one that you have to keep a careful eye on. Also, as well, look at the industrials like I just mentioned. We're setting up the portfolio, John, for a post-pandemic reality. And to be a little bit more pragmatic about growth trajectories, I think is important, especially with these high multiple stocks.
What do you think a post-pandemic world looks like, Chad?
So we're setting up our book in regard to buying emerging markets. We haven't been buying emerging markets for the last 3 years. Anytime I come on your show over the last 3 to 4 years, we've always said we're drastically underweight emerging markets or not in. Now we're overweight EM, we're overweight developed, we're underweight dollar-denominated assets here in the United States, though we do believe that high-quality companies there are seams of opportunity here in the United States. This is what we're doing, as well as we dropped our duration on the fixed income side below our benchmark, because we do believe over the next 6 to 9 months, you could see a modest normalization of that curve.
What is it about the trade story at the moment, Chad, that is not denting the appetite, the enthusiasm for EM, for Asia, for industrial names? If this was 2018 going into 2019, we'd be having a very different conversation after the address the President of the United States gave in the last 24 hours. What's changed?
Well, our belief, again, is that, valuations, when you look at it from a comparative perspective, they're grossly undervalued. 2, we believe that the dollar may modestly soften based off of monetary policy. And 3, I think that the trade issues that right now are front and center will pass over the next 6 to 9 months. And the growth dynamics within emerging markets, we believe, based off of comparisons to developed as well as the United States, are materially more attractive over the course of the next 3 to 5 years. So again, we're now overweight the EM side. Another thing is that we do believe our base case is that this healthcare crisis will slowly start to resolve itself over the next 12 months. And as that becomes more clear, we think that these seams of opportunities will become more attractive.
Hey, Chad, great to catch up, as always. Chad Morganlander there of Washington Crossing Advisors. Coming up on China, on the United States, President Trump vowing to scale back economic ties with the country. That conversation coming up next with Morgan Stanley's Matt Hornback. Your price action this Tuesday. What a start to the trading week. With equity futures down and down hard. NASDAQ futures off by 350, negative a little more than 3%. The pain concentrated in big tech, bringing S&P 500
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revision.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We'll end our reliance on China once and for all. Whether it's decoupling or putting in massive tariffs like I've been doing already, we'll impose tariffs on companies that desert America to create jobs in China and other countries. If they can't do it here, then let them pay a big tax to build it someplace else and send it into our country. We'll prohibit federal contracts from companies that outsource to China.
President Donald Trump coming out swinging in the last 24 hours, increasing his anti-China rhetoric ahead of the election as the U.S. considers a ban potentially on importing Chinese cotton. Bloomberg chief Washington correspondent Kevin Cirilli reporting the following. China's treatment of its Muslim minority group has provoked an international outcry. Relations between the United States and China have deteriorated over Xinjiang and other issues, including the crackdown on pro-democracy advocates in Hong Kong, territorial disputes in the South China Sea, and recriminations over the spread of the coronavirus. I'm pleased to say that Kevin joins us right now. Kevin, fantastic reporting as always. What have you learned?
Well, three things. First and foremost, that key quote yesterday from President Trump, the word decoupling, I'm told is going to be very much in the jargon of what administration officials and economists at the White House are going to start using, forecasting to U.S. supply chains that there is a dramatic reshifting that is occurring between U.S. and China's supply chains that are likely going to be rerouted in the long term. Secondly, as it relates to textiles, I'm told by administration officials that textiles, the president really is considering issuing a ban as it relates to the cotton industry in the Xinjiang province. That, of course, is where predominantly the alleged minority abuses against the Uyghurs is occurring. And finally, all of this is coming with the backdrop of the 2020 presidential election, where China is front and center at the geopolitical debate. Expect to hear more from Biden's presidential campaign on how a Biden administration would seek to use European allies in order to further isolate China economically.
Fiscal policy, a big part of the conversation down in D.C. as well, Kevin, not just the latest effort on China. Getting a headline crossing a Bloomberg right now from the German finance minister saying that Germany needs to take on significant debt in 2021. They will be back in line with debt rules in 2022. This is the story over in Germany. There was a thought that maybe they shifted to a new normal. I'll talk about this with Matt Hornback and Morgan Stanley in just a moment. For the United States, Kevin, I put the question to Larry Kudlow, the National Economic Council Director, if they were comfortable without a fiscal deal before the end of this year going into the election. Take a listen to what he had to say.
A bad package would not be helpful. A smart, good package, well-targeted, would be helpful. Do we absolutely need it? No, I'm not going to precondition anything here. What's good is good independently. What's not good is not good independently. Right now, the economy is on a self-sustaining recovery path, in my judgment, and we'll continue along those lines, and we'll continue to surprise on the upside.
Kevin, I pushed him, and he said we can live without it. Do you get the sense that the conversation you and I have had for the last 4-6 weeks has shifted? That we used to say it's a matter of when, not if, that maybe it's a matter of if it actually happens now?
You know, I think based upon my reporting, I think it will definitely still happen. And to that point, if you look at the trade balance, for example, between the U.S. and China, which actually in the Bloomberg terminal, it shows that it's expanding as the trade is picked back up again as it relates to the reopening of the economy. But what you just heard from Larry Kudlow in your interview is really in stark contrast to what Fed Chair Powell has been saying, as well as Randy Quarles. I mean, there's this whole notion that there has to be some type of stimulus. But when that stimulus happens, whether it's in after November 3rd or in December or January, it is still a matter of when, because they're talking about infrastructure. The Democrats are talking about infrastructure and the like. So it might not happen before November 3rd, but there still likely will be a massive government spending package sometime within the next 6 months. That's the expectation, even amongst Republicans and Democrats still, just likely not, maybe not before the election.
How many days away to this election, Kevin? Do you have a countdown clock in the Washington, D.C. Bureau?
No, November 3rd. Sorry, 2 months. Sorry, but I should.
Kevin, I respect you more for not having a countdown clock. I really do.
I take it one day at a time.
As always. That response should be a meme. Kevin, fantastic to see you, as always. Morgan Stanley expecting a flight to safety surrounding the U.S. election, saying the following: before election results appear with certainty, we expect risk appetite to be low among investors, which will likely keep a bid for U.S. Treasuries. The more time it takes to get a result with certainty, the flight to quality bid could increase. Morgan Stanley's Matt Hornback joins us right now. Matt, great to catch up with you, sir. Just build on that a little bit more, what you're looking for in the next couple of months.
Thanks, John. Well, so obviously the election is an event on investors' minds, and so we did some work to try to understand when we might actually know the results from the November 3rd election. And it seems to us, based on the surveys that we've done, that a base case of knowing who the victor will be on November 3rd seems a bit optimistic. So we're expecting to know the result, certainly in the week of the election, but perhaps not on election night or early the following morning. And historically, when you have a situation like this, doesn't occur very often, if only one time in recent memory, risk markets responded poorly. Of course, you go back to what happened in November of 2000, and you see very clearly that in the wake of the uncertainty surrounding that election, investors expressed that by reducing risk exposure in equity markets, clearly caused a bit of a flight to quality into the Treasury market. And so, that's something that we're looking at right now, John.
Well, Matt, let's build on that. The flight to quality and whether treasuries are still a part of that story. And in the words of Mohammed Al-Arian, offer you those risk mitigating characteristics that you might want in a risk drawdown. On the screen right now, 10 minutes away from the opening bell, equity futures on the Nasdaq negative 3.2%. And we do have a bid into the bond market. Treasury yields are down around about 4 basis points on 10s, down 6 basis points on 30s. Matt, as far as you're concerned, looking at treasuries right now, will they continue to offer what they have typically always offered when risk assets do poorly?
I believe so, John. I think we saw this very clearly back in March, not necessarily in the Treasury market, although, of course, Treasuries did very well. The starting point was from a much higher yield level than we have today, which is, I think, to your point. But when we looked at, let's say, the German Bund market back in March, German Bund yields started out extremely low and went even lower. In fact, the 30-year German Buxel traded down to its overnight financing rate. In other words, people were not only willing to accept a negative yield at that time, but they were willing to accept a negative yield below its overnight financing rate, which meant that there would be no carry for a levered investor into that paper. So, the corollary in the Treasury market would be akin to the 30-year Treasury going from 1.4%, which is where it is today, down to about 12 basis points. So that 100 basis point decline in the 30-year Treasury yield would offer you a total return in the context of 17, 18%. That will go some ways to mitigating any type of bear market in equities at this point. So I do think that longer duration treasuries will still offer you that protection.
I asked this question, Matt, because I'm sure you're experiencing it in conversations right now. It seems to be the topic of the moment. A 60-40 portfolio might be the portfolio of yesteryear and something needs to replace it. Subhadra Rajapra of SocGen said that story's over. I'm trying to think about potential substitutes, Matt. I understand your call that treasuries will remain that story, but when you have this conversation with clients at the moment, worried about the risk side of the portfolio and thinking about what to put on the other side of the barbell, so to speak, Matt, what does that conversation sound like? What are they reaching for? Is it just cash? Is it something else?
Well, no, I mean, the next place that we look to, and I think investors do as well, are the currency markets. And, the natural place to start is what currency tends to perform well during episodes of risk off. And, that you would turn to things like the U.S. dollar, the Swiss franc. And so investors do look at those currencies. They also run correlation analysis to try to understand historically what type of assets perform well when risk markets perform poorly. The problem ultimately with correlations is that they change over time. And so, of course, when you're trying to put on a position to mitigate risk using correlations, sometimes it doesn't behave as it has in the past. So in our view, though, treasuries will continue to remain a good risk-off hedge. We also think that the U.S. dollar would perform well in a scenario in which we did not know the results of the election for some time. So there still are ways for investors to mitigate risk, we think, in the traditional assets today.
Hey, Matt, good to catch up. What a morning for it. Matt Hornback there of Morgan Stanley on the other side of the portfolio with risk falling out of bed this morning. Coming up, the analyst action you need to know. That'll be next in our morning calls. And later, Dan Ives of Wedbush explaining why he's staying bullish on big tech amid the rout of the last couple of days. NASDAQ futures down 3.3%. This is Bloomberg.
Today I'm going to show you how to make a superfood that'll last a lifetime without refrigeration. And it's so nutritious, you'll never have to stockpile another food. The food's called pemmican, and it was widely in use by the natives of North America and also by the Western explorers who would go for months without contact with civilization. So you'll need 6 pounds of beef, 2 pounds of rendered beef tallow, and 1/3 cup of strawberries or blueberries. Let this dry for about 15 hours or until it's crispy. Toss it in the food processor until it becomes a powder. For our next step, we need to cut the fat into small pieces about 1/2 inch. Mix the shredded meat into the melted fat, and here's what I got. This was just one awesome chapter in the Lost Ways, but you won't believe the survival skills we've lost to history. And that's what this book is all about. Saving our forefathers' skills.
Next time you see this plant in your backyard, don't cut it down, because this is the best natural painkiller you'll ever find. Now, if you take a leaf or stem and squeeze it, you'll see a white substance coming out. This is where the potency of the plant lies. So let's avert our gaze from our modern survival thinking for just a bit, and look at how our great-grandparents did it 150 years ago. This is exactly the kind of information I found in this 350-page book called The Lost Ways. This is probably the only survival book I've actually enjoyed reading.
5 miles from here.
I love many of the old ways. If things keep going the way they are now, we may need them again very soon.
Here in one book is all the knowledge needed for basic survival or going off the grid. And everything is explained in detail in simple, basic terms. My hard copy is now an essential item of my bug-out kit.
This is an excellent source of things lost to the modern age. Just skimming through the table of contents alone, I can see how this book will be very valuable for future survival.
For this amazing survival book, click below.
To top expectations due to her positive outlook, and Evercore upgrading Ford to inline with an $8 price target. 3 of the calls, the opening bells next.
when everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally.
Coming off the back of the first weekly loss since July, we are adding to those losses this morning. S&P 500 futures down 52, negative 1.5%, but there's the pain, the epicenter of it. Big tech, NASDAQ futures down by 3.4%. Switch up the board, it is risk aversion bleeding through every single asset class worldwide. Into the bond market, a bid on 10s, yields lower by 4 basis points to 0.68%. In foreign exchange, a stronger dollar against the bulk of G10, euro dollar south of 118 at 117.83. We are in 1/3 of 1% on that currency pair. And in the commodity market, there's a route for you. Negative 7% on WTI. We trade with a 36 handle just south of $37. That's the cross-asset price action this Tuesday. Let's get to the market desk and get you some movers. Here's Abigail.
John, the tone is risk-off enough this morning that we're seeing something relatively unusual for stocks that are being included in the S&P 500 on the quarterly rebalance, and that's slightly popping higher for one stock, and then we're also having some declines. But the big mover, of course, Tesla, down 15.5% on the fact that the company last Friday, the news came out that they will not be included despite meeting some of the criteria. Now, of course, that stock up about 600% from the March trough to the recent peak. So you could say that the 30% drop from that recent peak, healthy consolidation, the idea that they were going to be including the S&P 500 might have been baked in. Sellers really stepping in now that they're not. As for the stocks that are being included, Etsy, Teradyne, and Catalent, you can see not really a bullish response. That's how risk off it is on the day. However, turning to another electric vehicle maker, Nikola, the shares are absolutely soaring, up 29%. This on the news that GM is taking a $2 billion stake. That stock is up higher as well, up 5.3% on the partnership around an electric truck, and the idea here that the company's really moving into the modern future here with electric vehicles, a big step. To the downside, though, this morning's big player, Microsoft, actually down 3.4%, in line with the tech sell-off, and with Apple trading lower as Goldman Sachs is reiterating their sell rating, saying that the valuation simply is not there for the growth, which you can make the case has been the truth since August. That stock at greater than decade high valuation multiples. And finally, John, Zoom, last week's best stock, even with last week's tech rout, down 20% today, feeling some of the pain, down 4.6% on the year, up 443%. It's very clear that you have these tech and stay-at-home stocks selling off hard once again, John.
Abigail, thank you. Thank you very much. Abigail Doolittle will be back with us a little bit later to give you the sector composition of this breakdown. Let's lift the lid on the S&P 500. 2 minutes into the session, your equity market down by 1.86% on top. Your relative outperformance, of course, coming from the utilities, given the bid we see in the bond market this Tuesday at the bottom. Widely expected, anticipated once again, negative follow-through after the sell-off at the back end of last week. Big tech, IT, down by a little more than 3%. Speaking of down 3%, that's been the story for the NASDAQ all morning. The S&P is lower. The NASDAQ is much lower. The NASDAQ down by 3.3%. Tech getting hammered after being one of the top performers through much of this year. UBS's Stuart Kaiser expecting the declines to be short-lived.
We still think large cap tech leadership, or what we would call selective cyclicality, is sort of the way to be positioned. And this is probably a shorter term disruption for the markets. But, I think you need to respect the fact that we've seen in 2 weeks 1.6 million contracts added in the big 5 tech stocks, and 70% of that's been in call options. And when that kind of flow goes through the system, it's going to impact the way markets trade.
Joining us, back with us, Bloomberg's Scarlett Fu. Hey, Scarlett.
Hi, John. Yeah, all that options activity may be coming home to roost here because over the weekend, the Financial Times identified SoftBank as the NASDAQ whale. That is a large investor with the money to single-handedly move the price of an individual security or group of stocks or even the market. And the whale is often exposed when it becomes apparent that they move the stock in a negative way. According to the FT, SoftBank spent $4 billion over the past few months buying options on the biggest tech names. Now, to be sure, one institutional investor is still relatively small when you compare it to the army of retail investors who've been plowing into call options. According to another estimate, individual investors have shelled out $40 billion in call premiums in a month. That would be 10 times what SoftBank reportedly spent. So do call options drive the underlying stock prices higher? That's a big question. And my colleagues Joanna Yassinger and Jakob Petersil spoke with a hedge fund CIO who says it depends. It depends on who's doing it and how they do it. Now, institutions tend to bypass market makers, and they use strategies including a call spread to sell the underlying shares. So they hedge their exposure. But individual investors tend to pile into call options that expire within 2 weeks. Because that's short term, it often requires hedging by market makers, which drives the underlying stock prices higher. What you're seeing here is total open interest in a couple of big names. Microsoft, Facebook, Alphabet, Salesforce, Adobe all saw a lot of call spreads in early August, we believe to be from institutional investors, according to Amy Wu Silverman. And total open interest on a bunch of these names is above 8 million, which would be a record. Early on after the pandemic, or during the pandemic, in March, April, and May, Amy Wu Silverman said the jump in call options was mainly for smaller contract sizes. So that would be a sign of retail investors, but it's changed its profile a little bit, and it looks like perhaps institutional investors are following retail investors. Options expiry should be pretty interesting, John.
Going to be interesting this time around, that's for sure. Scarlett, great to catch up with you. As always, is the tail wagging the dog, so to speak? We've heard that so many times over the last week or so. Here's the price action 5 minutes into the session. Equities lower by 2% on the S&P 500. On the Nasdaq, down by 3.2%. The difference between today and Friday's session is what Treasuries are doing. Treasuries with a bid this morning. Yields lower, much lower. On big tech, Dan Ives of Wedbush has been a bull all year, and he remains bullish on the high flyers running the following. We view last week's tech sell-off as a healthy pullback going into September after a massive run with tech leading the charge. Tech stocks have another 20 to 25% to move higher over the next 6 to 9 months. We view these pullbacks as digestion periods. As part of a broader tech re-rating, we would be buying this sell-off. Dan joins us right now. Dan, I'm pretty sure that the last time you and I spoke, a month ago, you said there was 20% upside on these names. Now, don't get me wrong, you weren't wrong. There was, and we saw it. Why another 20%, Dan?
Yeah, I think it's really the fundamentals. I mean, if you look what we're going to see, I think, in 3Q and 4Q in tech, I think a lot of these street numbers move higher by 10, 15, somewhere 20%, especially going into next year. It comes down to the secular drivers are accelerating. Cloud, cybersecurity, what we're seeing across big tech, especially names like Microsoft, and then, of course, the super cycle with Apple. I mean, it's a good example. The last 4 weeks, every week, our checks in Asia show an uptick in demand, not a downtick. So I think the fundamental drivers and the re-rating, that combination is why I continue to see a green light to own tech.
These are nice stories, Dan. They're nice bedtime stories for equity bulls. I just want to make sure people don't wake up to a nightmare. And that's the price of the story. That's the difference. The price of the story. What's the appropriate multiple on some of these companies? And Dan, when I ask people that question, they can't give me the answer. How do you come about getting that number, understanding the appropriate multiple? Not that this is a good story. Of course it is. We can talk about any one of these companies. Fantastic stories. Minting money in a shutdown. But it's the price you pay on those earnings. What is the appropriate multiple to pay for those numbers?
Yeah, look, and that's why right now it's such a debate among the bulls and the bears. I mean, like, let's just take Microsoft as an example. That was a 4 or 5% grower. Now we're looking at 10 to 12% grower because of cloud. A re-rating in terms of growth, numbers continue to move higher. That's the sum of the parts. In that cloud business alone, if you just value that, it's worth $1 trillion. And then you look at a name like Apple, it's sum of the parts. Now, historically, you buy it at 12 times, sell it at 16 times PE. Now PE is in the 30s. That's a sum of the parts. You have to value the services business separate from the hardware business, which is why I continue to view the re-rating, because it comes down, the market's starved for secular growth stories. So many of them are in tech. It's why you even see a nickel up, in this GM news, significantly because
Yeah.
that's an EV play. $1 trillion market opportunity. I count on one hand the amount of names that play the EV trend, obviously with Tesla leading.
Any historical parallels here for you, Dan, as an equity bull? For many equity bears, they can draw a parallel. They'll benchmark this against the dot-com bubble, and I'm not sure it's ever appropriate to benchmark anything against the frothiest of frothiest that we've probably ever seen and maybe ever will. But, Dan, is there historical parallels that exist for you to lean on?
Yeah, so let's go back to when I covered stocks, back in the late 90s, early 2000 bubble. Remember, you didn't have the fundamental drivers. It was all about what could happen. Here, the fundamental growth stories, they're materializing. And in this pandemic, what you've seen in tech, and there's an important point, these growth stories have been pulled forward 2-3 years ahead. There's a digestion period. You're going to have these pullbacks, especially even on some, white knuckle headline risk numbers. But ultimately, to me, as we drive through fundamentals in the next few quarters, for the path for tech is still higher. Although remember, like many of the skeptics, they're going to continue to hate, just like in March, April, they thought the market was going lower with tech. And that's why our opinion, it's a two-phased view, 6 to 9 months, tech stock still 20-25% higher.
Well, Dan, you know what people are saying now? This was all SoftBank. Don't try and justify the unjustifiable. It was just one company pretending to be a hedge fund, bidding up short-dated bullish calls on some of these names. From your perspective, for a stock analyst, do you think the kind of options action that we've seen over the last month or so can move the underlying stocks to the extent that some people think they have?
Look, I think maybe a bit overstated there. Well, no doubt that's obviously been in play, but I can just tell you from my interactions on a daily basis with institutional investors, the view continues to be, how do you play the trends? And many that were haters 6 months ago are now buying, quarter half positions in the cloud, cybersecurity, large cap tech on these pullbacks. So I view it based on my sort of interactions with institutional over 20 years. This does not, to me, feel like it's the 9th inning. It feels like we're still in the 6th, 7th inning of a re-rating in tech with this pullback today.
Dan Ives, still bullish. Dan, always great to catch up with you, buddy. Looking forward to getting you back on the programme soon. 10 minutes, call it 11 minutes into the session. Equities down 2.2% on the S&P 500. On the NASDAQ, we're lower by 3.4%. We have a break of $40 on Brent crude for the first time since June 25th. We have a bid into the bond market and a stronger dollar as well. Let's get to the market desk and get you some movers. Here's Abigail.
John, we may be seeing one ray of light here, and I say that because Peloton, one of the stay-at-home stocks, one of the darlings this year, had been sharply lower in the pre-markets, actually now reversed higher, up 1.5%. They report on Thursday. You could say that the expectations are high, priced to perfection, with the stock up 184% on the year, and it was down sharply Thursday and Friday, but again, a little bit of a turnaround as they're also making some positive announcements around their equipment. But again, this could be some sort of sign for the tech and stay-at-home on the day. Let's see. To the downside, though, we have Boeing down sharply as the FAA probes their manufacturing flaws in the 787 Dreamliner relative to Square and the tech sell-off. Take a look at that, down 4%. Plus, Goldman Sachs has cut one of its fintech peers to a neutral on margin pressure, so Square down in sympathy. And then finally, we have Corbus Pharmaceuticals getting absolutely smashed on the day, down 75%. Not surprisingly, its worst day ever on record. This as a stage 3 study on systematic sclerosis failed. Binary event did not go so well for that biotech company, John.
Abigail Doolittle, thank you. Around about 12 minutes into the session, equities lower, down by a little more than 2% on the S&P 500, negative 3.6% on the NASDAQ. Coming up, bankers going back to the office. Virtual Wall Street, seemingly slowly, might be coming to an end. We'll get the view from Charles Schwab's Colin Martin. We'll do that next. From London and New York, this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
"15 minutes into the session, equities breaking lower, down 2.5% on the S&P. Session lows on the Nasdaq, down 3.61%. Big tech facing some big pain in the last couple of days. In the last couple of minutes, some breaking news on the US and China. With that breaking news, Bloomberg's chief Washington correspondent, Kevin Cirilli. Hey, Kevin.
Hey, Jonathan, I can tell you that the U.S. has imposed restrictions on the Xinjiang Autonomous Region in the Xinjiang province, as well as on close to 10 companies potentially as it relates to what's known as a withholding release order from the Department of Homeland Security. This is restrictions relating to textiles, tomatoes, as well as even technology. 3 of these withholding release orders have been enacted already, largely pertaining to hair products and cotton. This has the potential to impact domestic U.S. supply chains in the fashion industry as well as in the hair extension industry. And what's coming down the pipeline, the U.S. is going to be looking into several other additional companies, including tech companies in China that are really a chip manufacturing for many of the inexpensive laptops that schools in the United States are using. The bottom line, the U.S. administration now taking steps to enact withholding release orders against several Xinjiang companies in the region, citing human rights abuses against the Uyghur minority group.
Kevin, widely reported alleged human rights abuses taking place in the region. In fact, just saying the word right now will mean this won't even air in China as you and I speak. Likely just blacked out because it's not talked about. And I just wonder from your perspective, Kevin, how separate we can keep this issue, a serious allegation, from the trade story and the trade deal more broadly between these two countries.
Well, 2 points. First and foremost, several top administration officials within the last week have begun to really use strong rhetoric about the human rights abuses in the region. And the president has not yet echoed that rhetoric, but his team is using that rhetoric. And typically, we've seen that as a strategy that the administration has utilized before, where administration officials say fiery rhetoric, and then the president then starts to use that rhetoric. Secondly, in terms of domestic supply chains in the United States, as the president said yesterday, using the word decoupling in his White House address, the actions taken today impact everything from students' laptops to Hollywood hair extensions to designer duds. And so this is a massive step in terms of how the administration is using withholding release orders, which typically had not been a tool at their disposal for that they've used for quite some time. They're now using WROs, as it's known in Washington, significantly. And I would compare it to how several years ago we started hearing a lot more about Section 232. WROs is the strategy now that they are using and the tool they are using to impact supply chains coming from China.
Kevin, thank you. Brilliant reporting. Thank you very much for this. Kevin getting ahead of this story in the last 24 hours. Joining us now on it, Colin Martin of Charles Schwab joins us now over the phone. Colin, over the last several months, there just seems to be a lot more tolerance before tension between the United States and China. What's behind that shift as far as you're concerned?
Well, the thing that we're looking at, Jonathan, is uncertainty and what it means for the market. There's plenty of things that we've been paying attention to lately, mainly the pandemic, but now China is kind of back front and center, especially with this headline this morning. So if we had our crystal ball out, it's even murkier and a less clear outlook now. And that just means, again, more uncertainty and something that's likely to keep Treasury yields down for the time being.
Well, Colin, let's build on that. Portfolio construction right now, the risk asset that's vulnerable at the moment seems to be tech stocks. The Nasdaq down by 3.4%. The conversation I've had repeatedly with fixed income investors, portfolio managers, is how you offset some of that risk in the portfolio. What do you replace Treasuries with if you don't believe Treasuries can offer those qualities that they used to for a long, long time? Colin, are you taking the other side of the argument, saying that Treasuries will remain bid, they will perform in periods of risk aversion?
We do think so, and we're getting the same questions from our clients and our investors, and we continue to tell them that Treasuries do have a spot in their portfolios. Now, we do think there are other areas in the fixed income market if you are looking to take a little extra risk to get slightly higher yields, whether it's an investment-grade corporates or something like that. But when we look at the Treasury market, yes, we acknowledge that yields are very low right now, and there's very little room for them to fall. There's still a little room for them to fall, though. So from a price standpoint, from a support standpoint, we think that if we do continue to see stock volatility or declines, they'll continue to hold their value.
Hey, Colin, great to catch up as always. Busy morning for us and for you too. Colin Martin there at Charles Schwab. On this market at the moment, we break down on the Nasdaq, negative 3.3%, call it 3.27 on the Nasdaq. The S&P 500 down by 2.35%. With the price action at a sector level, pretty obvious to the story this morning, Abigail. Tech hit hard.
Indeed, John. It is certainly a risk-off morning sector-wise and right across the board cross-asset class-wise at this point, something that we didn't quite see last week, perhaps putting more reason to think we'll see more of a sell-off for tech. Relative to the sectors, if we go into the Bloomberg terminal and take a look at the IMAP, something unusual. We have true defense, utilities, consumer staples, and healthcare up top, outperforming. That said, they're still down 1.7% at the most. And then on bottom, interestingly, the worst sector, energy, down 3.9% in sympathy with oil selling off about 7%. But right behind it, tech down 3.2%. Now, lots of talk about the call buying creating this tech bubble and then the move to the downside. Christian Fromhertz of Tribeca Trade Group, who spent a good amount of time trading with Goldman Sachs in the past, he told me last week that he thinks that a lot of this also has to do with the move into the cyclicals. He thinks it could last, that it's disruptive. And of course, you had the Fed's big move a couple weeks ago, the biggest policy move perhaps since 2012. That could be a piece of it, too, supporting that cyclical move. And there we have it. Over the last 5 days, the worst four sectors. You have tech there. You also have energy, in sympathy again with oil, consumer discretionary, which of course is Amazon, and then communication services, your Facebooks, your Alphabets. But tech down 9.1%, really being dragged down by Apple, currently holding its 50-day moving average. So much of this is technical, John. It's going to be interesting to see whether the Nasdaq 100 can hold that support, which right now it actually is.
This following some massive gains for 2020. Abigail, thank you. Coming up on this programme, the market moving events you need to be watching going through the rest of the week. The trading diary up next. The price action shaping up as follows, approaching 23 minutes into the session stateside. The S&P 500 down 80 points, off by 2.33%. The Nasdaq getting absolutely hammered. The financials too. If you get to the price action, it's not just about tech today, it's about the banks as well. The financials down by around about 2.5% on the S&P 500, largely off the back of this move in the bond market. If you switch up the board, huge curve flattening, undoing what we saw in Friday's session. Yields lower by 8 basis points on a 30-year, on a 10-year down by 5. Your yield, 0.66%. From London and New York, this is Bloomberg. It is an ugly start to the trading week in the United States. This Tuesday morning, we're down 2% on the S&P and down around about 3% on the Nasdaq. That's the price action. Here's the week ahead. The trading diary shaping up as follows. The U.S. Treasury selling $50 billion in 3-year notes at 1 Eastern. China PPI and CPI coming on Wednesday. An ECB rate decision coming up on Thursday. Plus, another round of initial jobless claims and U.S. PPI. And finally, U.S. CPI data and a monthly Treasury budget statement coming on Friday to close out the week. What a start to the trading week. 26 minutes into the session, equities down and down hard. We can continue the conversation on Twitter at FarrowTV. For our audience worldwide, this was the countdown to the open. You're watching Bloomberg TV.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Ej kochanie, ale będziesz dzisiaj gięta. Będziesz bujać się na boki jak przynęta. Udowodnię ci, że będziesz mnie pamiętać. Ale kotku, najpierw raczej musisz się rozebrać. Delikatnie i powoli, tak jak zechcesz. Zrób mi jeszcze jedną rzecz, zanim mnie weźmiesz. Na początek chciałem grzecznie ci powiedzieć. Wszystko zgodnie z planem, nawet gumy można nie mieć. Woda, kos, malujemy całą noc. Po co chodzić, jak można fruwać. Woda, kos, biały tablet, biały nos. Raz blondynka, a raz ruda. Woda, kos, woda, kos. Po co chodzić, jak można fruwać.
Sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine. And we help fill that role.
Pada saat itu ketika saya mengetahui bahwa deposit minimum di
down hard and getting whacked today are semiconductors. There's beta there, so there's a reason that they're pulling back hard. But in general, based on our view that this is a bull cycle that should continue, that beta should get rewarded in cyclicality, we like semiconductors here on this pullback. NVIDIA would be the one of the biggest within that group.
Ari, how concerned are you right now as we sit here today and see another day of a sell-off, that we might see a pre-election bear market? And I bring that up because the past 2 or 3 sessions, I'm seeing money coming out of the market, out of these hot tech trades, but it's not necessarily going into the value sector.
Right. I think that's such a critical point. It's really just a function of the leaders coming into support. And that's what I like to see. I'd be much more concerned if it would be some of these weak names that are breaking down, that if you think back, that was the setup going into the March swing, which was a bear market for us, where you really had the weaker parts of the market, financials and energy, breaking down ahead of everything else, where it was actually the tech names that held up better. To me, this is instead more of a function of a healthy setback and a check back in these leaders. And the fact that the laggards are hanging in there, I think is encouraging to us, and why I don't think you're going to get that set up. But yes, going into an election year, you can have some more moderation leading directly up to the election. We've been noting that election year strength usually occurs in the summer. Now it gets a little bit dicier. We're going to be seeing if the market is pricing in an incumbent re-election, or if the opposition starts to gain in the polls. Typically, the market will trade lower when the opposition becomes the likely winner, and then you'll see some actually additional volatility in the post-election year too.
Is that what we're seeing, Ari, into the election right now? You're seeing institutions raise cash into an election that is obviously very uncertain.
It could be election risk. It could be just a function of a lot of these names getting extended off their moving averages and just some near-term profit taking amid what is typically a poor performing time of the year. September, one of the worst performing months of the calendar year. So again, there's just not the breakdowns to point to suggest and lay out that more menacing scenario.
What do you think is going to get us back on track? Is there going to be one catalyst, or is it all the money, all the cash that's hanging out on the sidelines, and people will start feeling more comfortable getting back into the market, and that's what's going to get this bull market back on track, Ari?
Yeah, oftentimes it's just a function of time. If you look back over the last decade, typically these corrections drop about 8%, which we have already reached, but they'll last 3 to 4 weeks. We're only 3 or 4 days into this. So some additional time consolidation is likely, but I think, again, for us, the key point of why we do expect that long-term upside is that this has been an incredibly tough market over the last 2 years. We think the contrarian case is to the upside. If you strip out tech, and we get it, tech has had a nice run. It's been in a very healthy bull market. We think its steadiness, in fact, is very underappreciated. The rest of the market has really stunk over the last 2 years, dating back to the start of 2018, which is what we kind of viewed as this top in global risk, when small caps peaked, Russell value peaked, world equities peaked. And after this 2-year bear market in risk, we think some of those beaten up areas are actually starting to show signs of basing. Now, they've hit this near-term hurdle, but I still think there's a possibility where they start to break out to the upside, and that strength will carry us into 2021.
Would love to get your thoughts on Tesla, which we know was one of the most highly valued companies on Wall Street. It is now down about 16% right now. One of the reasons why is because it was not included in the S&P 500 index. You know, a lot of investors were betting on that, especially after Tesla had reported a profit for the second quarter in July. Were you surprised that Tesla was not included in the index? And was that the right decision on the part of the index committee, do you think?
That's a great question. It's a great question because I don't have a great answer for it. You know, I'm just looking at the reaction of Tesla, and there's a lot of stocks. I don't think the inclusion or lack thereof of the S&P is really the key determinant of our view of how a stock's going to perform now and going forward. But again, here's another stock that just really had run up a lot into its recent peak, down 16% today. I think down 30% from its peak. So this is a stock that had this massive downturn, yet again is still above its 50-day average. So we can quote these wild day-to-day swings in a stock like Tesla, because again, that's how it trades. And if you get a bounce back, it'll be up 10% in a day. So you have to have the stomach. If you're a trader, you have to be able to stomach that volatility. But if you were to take a step back and let's look at the long-term trend, a stock that's coming off a new high into key moving averages, making higher lows for a number of years, this uptrend is still intact in what we still think is going to be a high growth led secular bull market where these higher growth companies continue to demand a premium in this low yielding backdrop. This is still an uptrend in our work.
Ari, you mentioned the volatility that we're seeing in Tesla's stock. Do you think maybe that's one of the reasons why it didn't make it into the index? I mean, do you want a stock that is this unpredictable in an index that is the benchmark for the market and held so widely?
I'm unsure of the exact reasons why it didn't make the inclusion, and if that's going to carry it forward. If it's, again, not knowing the details of the report, there's plenty of high beta stocks in the S&P 500. So in my view, I don't think that's the big reason holding it back.
All right, we'll leave it there. Ari Wald, senior analyst at Oppenheimer. Always good to speak with you.
You guys as well. Take care.
Senate Republicans are pushing ahead with their so-called skinny COVID relief bill. They plan to introduce it today with money to extend some unemployment benefits and pay for testing. Democrats say they'll block it. It comes up about $2 trillion short of what Dems want. Meantime, the leaders of some of the world's biggest biopharma companies have signed on to a new pledge promising to follow the science when it comes to a coronavirus vaccine. Yahoo Finance healthcare reporter Anjali Kamlani is with us now. Anjali, is this just a way for big pharma to push back on pressure from the White House to release a vaccine ahead of the election?
I think the White House pressure is definitely going towards the agencies that are overseeing this and the regulatory bodies as well. So definitely, you know, this is a really strong sort of confirmation from these companies that they are in fact backing the system, the regulatory system that is set here in the U.S. Those names are the ones that we all know now as frontrunners or sort of leaders either in the vaccine space or directly in this vaccine race, and include Moderna, Pfizer, their partner BioNTech, Merck, Johnson & Johnson, Sanofi, GlaxoSmithKline, and Novavax. And so these 9 companies are really the ones that are the ones that are in focus right now and have faced that pressure, you know, under the Trump administration to push a vaccine forward. So we know we've heard from all the government officials, whether it be FDA Commissioner Steve Hahn or others, saying that they will, you know, follow the science, follow the safety. And so here with the companies as well, it sort of obliterates any hopes of really having that October surprise. And it's up to these companies to, in fact, submit applications in order to be approved by then. So really, we're hearing a lot of it's really not going to be until November that we get any sort of readout or indication. And by the end of the year, possibly one vaccine approval at least.
Anjali, I guess the UK is also pouring some cold water on hopes for a vaccine before the end of the year. What are they saying?
That's correct. So the UK, with its deal with AstraZeneca, which is developing a vaccine in collaboration with Oxford University, has said that even though they've already put in the orders for these vaccines, it's unlikely that they're going to see them until next year for, you know, sort of widespread rollout or even the first batch. And so that kind of follows in line with exactly what we're talking about here, as well as what the projections are from many of these companies.
Anjali, the number of new cases, COVID cases in the U.S. Fell below 25,000. Good news or too early to tell?
Both. Good news because we are in fact seeing that decrease. Too early to tell because of multiple factors. Number one, school reopenings, college reopenings, as well as Labor Day weekend. We won't know the results of you know, what has taken place over this time and whether or not any super spreader events did occur during this time period.
Yahoo Finance healthcare reporter Anjali Kamlani, thanks so much. All right, we have more from our chat this morning with Nikola founder Trevor Milton and GM chairman and CEO Mary Barra coming right up. Welcome back to the first trade. A major announcement in the automotive industry today. Nikola is partnering with General Motors to produce their new electric pickup truck called the Badger. But this is not the first strategic partnership with a startup for General Motors. It also took a stake in Lyft in 2016 and then sold it earlier this year. We had the chance to sit down with both Nikola founder and executive chairman Trevor Milton and General Motors chairman and CEO Mary Barra to discuss how this partnership is in line with GM's vision and how GM and Nikola are gearing up for the 2020 election season.
This partnership, it's going to allow both of us, to really grow value and create value for our shareholders. When you look at the technology that we bring, as Trevor said, it's validated, well engineered, and we're ready to go. So this announcement is about a partnership with two companies that have a shared belief in the future of zero emissions, but it's also about leveraging technology, driving down scale, and really accelerating both of our activities. So we couldn't be more excited.
Mary, for those not familiar with your electric vehicle plans and rollouts, where do they stand now?
Well, we're on track next year. In market today, we already have the Chevrolet Bolt EV, and we have two variants of that coming next year, as well as next year we'll be launching the GMC Hummer EV, and then we have a strong portfolio following that with the Cadillac Lyriq and many more that we haven't shared with the world yet. So we're very excited and working together with Nikola that allows us to accelerate, continue to get scale, and drive the efficiencies that are going to put us in a leading position in the marketplace.
Mary, with this partnership with Nikola, are you going to be bringing on more workers to meet demand for the Badger and for future projects with Nikola?
Well, I think, we always are looking to grow from a manufacturing, from an engineering perspective when we have opportunities like this. So we'll be ready to be able to build the volume and get the vehicles engineered and manufactured on time. So that's a huge opportunity for us as well.
I want to pivot for a moment, Mary, because I know GM and actually Trevor with Nikola, you all have a lot at stake when it comes to policy issues and decisions coming out of Washington, issues ranging from trade and taxes to autonomous vehicle safety rules and emissions. I know, Mary, that you gave President Trump's daughter, Ivanka Trump, a tour of one of the Michigan plants just a couple of weeks ago. Have you or GM endorsed a candidate yet, and do you plan to?
So General Motors for many, many years has always worked with every administration. We're ready to work with whoever wins the election and whatever administration's in place on the very important issues that you talked about as it relates to China, as it relates to trade, as it relates to the regulatory environment, the safety environment. And we're very much advocating for an all-electric future and doing what we need to do across infrastructure, across the regulations to make sure we encourage people to adopt electric vehicles. Because when they get into them, they find that they love them. They're, instant torque. They're fun to drive, and so that's where our focus is. And we'll work with anyone as we move forward as it relates to the administration and, frankly, governments around the world.
Is there right now, and I know this is probably not a very easy question to answer unless you've really looked at their platforms in a big way, but is there one presidential candidate over another who would be more friendly to the EV market, perhaps?
I think as we look forward and see the importance of leading from an electric vehicle perspective for competitiveness, I think it's going to be on the agenda of both parties.
Trevor, I'll put that question to you. You don't sleep. You just admitted it. I can't imagine you do get a lot of sleep. You've had to see Joe Biden's proposal, Build Back Better here. How would that shape your future if he does get elected? And some of those green investments that he wants to put forward has to benefit your company.
I mean, look, anyone who's focused on helping, clean things up and make this world a better place, I'm all for it. There's two things I don't do. I don't do religion and politics. And so I do Nikola Badgers. That's what I do. I love electric vehicles. And so that's what I focus on. And listen, I just hope they all stay out of my way. That's all I care about. Let me flourish. Let me do what I can do. That's all I ask. Let me be me.
Good luck with that one. But Trevor, how did you center on GM as a partner? I imagine you have a lot of people interested working with you. Why GM? And what is it like working with a more established company like a GM?
Well, it's awesome. It's also really hard. Look, and not in a bad way. It steps up your game to a different level you've never experienced because your team is in meetings with the best of the best in the world. And there's a lot of answers we can't give them. Like when they'll ask us something, well, sometimes we'll just say, look, we don't know that. And they're like, it's okay. We know it. It's okay. Don't worry about it. And that's the good part about it. The hard part is that we have to keep up with they've got, these groups have got, thousands of people on one project minimum, right? And so our whole company's only 400. So you can imagine that's a little bit difficult. But what was special about this is that we had term sheets from most every OEM in the world, and we got to choose who we were going to work with. It's a very unique situation. I mean, I don't know of any other time in history where a not so-called startup had the chance to work with every single group almost in the world. And we chose GM primarily for, I'd say, 2 or 3 reasons. One is Mary. I absolutely love this lady. She's as smart and brilliant and awesome as they come. They're very hard to find like that in like any CEO in the world. And so I can speak to her in a way that she understands me, and I love that. She's just awesome. Number 2 is being able to leverage the battery. We're talking about a $4 billion savings, leveraging the fuel cell. I mean, you're talking about instant integration into our Badger, and also some of our trucks. If you think about what Honda's done, good heck, Honda and GM have built an incredible fuel cell. That gives us access to being able to put the Badger on the road in the time frame we promised. It also allowed us to prevent having to spend billions of dollars in a manufacturing plant. So all these racking up, if you think about this, that's 4, 5, 6, 7. I mean, internal numbers go up to past those numbers in savings, and that's why we chose GM. Other groups brought certain things, but not all of that. And it was really the people. I mean, I can't stress that enough. It was Mary's team, just fantastic. That's what sold me, was the people, because anyone can build a product, but the people are just as important.
Speaking of your team and your people, Mary, I understand that you are working to create a, quote, more flexible work culture within GM during this pandemic, post this pandemic. What will that look like for your workers, and in particular for those workers who work in GM plants?
Well, clearly, getting everybody back to work and being able to do it safely was our #1 priority. And so we worked with lessons from around the globe and other industries to make sure we have protocols that allow people to be back to work safely. And I visited 10 plants as we started up in the May timeframe. And every place I went, people said, "Hey, I feel safer here than I do when I go to the grocery store." So we think it's important that we maintain that because health and safety is our #1 focus. And then enabling work. I mean, our people also said, "Hey, we want to get back to work. We love what we do." And so we're focused on that. I do believe we have the strongest team on the field across all dimensions of General Motors. So I'm glad that Trevor has gotten to see a little bit about that. And I can tell you that the team is very excited about working with Trevor. The passion and energy he brings to this space, we think, is only going to advance it. So our people are our most important asset, and they stand ready to partner and do the work.
Mary, we're still in the middle of a pretty bruising recession here in the country because of the pandemic. How would you grade consumer demand right now?
Actually, it varies across the globe. We're seeing, though, China come back as well as the United States and North America in general, a little faster than we thought. I would say it's still, we're cautiously optimistic. There's a lot that we need to see stay going in the right direction. But right now we're seeing, especially retail demand, come back more quickly than we expected.
Trevor, I know that GM is going to be working with you on the Badger. Is that globally or is that outside of Europe? Can you clarify that for us?
Yeah, right now it's North America, but we've talked to them about different markets that once the homologation, the certifications come through for other markets, we're definitely willing to open it up to other markets, and that'll absolutely be with GM. I mean, look, we want to build that to every market that can actually accept this truck. As you guys know, it's a big truck, right? It's the size of it's a little bit bigger than a Ford F-150-ish if you're thinking about it, but or like a Silverado. It's like kind of that size right in the middle. So it's a very unique truck, but it's not going to fit all markets around the world. It's really tailored towards North America, Australia, some parts in Europe, South, areas like that. But who knows where it'll take us? Right now, we're focused on North America. We'll spend the next few years selling it out here. And that's my goal right now, is just to be profitable, be sustainable. And I've said this many times, even on your program, you can't be environmentally sustainable if you're not financially sustainable. And that was the reason why we did this deal.
I mean, this is a big bet. You're, according to the press release, you'll be involved with Nikola, I believe, close to 2025. That's a big long-term bet. But the market is sending your share price up higher. Do you think the market is really underestimating what you're doing in electric vehicles? This is a real commercialization type opportunity, but it also could be said that maybe you should spin off the electric vehicle business because it is being undervalued. Investors could look at it 2 different ways.
Well, we're focused on creating long-term value, and I've always said that's our focus, and we're going to do what's right for our shareholders. We see this as an incredibly important day because it's a validation of our technology, both our battery electric technology as well as our fuel cell technology. So we think this is just the beginning of unlocking the value that's within the company, also the capability we have to engineer, to have scale, especially as we look from an electric vehicles in China as well as North America, and just to continue to build and be able to demonstrate that we are going to be a very strong player in the electric vehicle future.
Mary, I know you've committed to 20 new electric vehicles by 2023. Sounds pretty aggressive. Is that still the number for you?
It absolutely is. It's a global number, but it definitely is what we're working on, and we have engineers working around the globe to make that happen.
Big day indeed for both auto companies. Nikola shares are surging 40% this morning, and in a down market, shares of GM are up close to 7%. Not too shabby. All right, Boeing finds itself in more hot water over its production processes. More on that one in under 2 minutes.
In order to further isolate China.
6th, 7th inning. ke alai ka polila uhe nei ka vai o ia pua Ui au koni koni ka vai koni koni Wai hui hui o ke ani ani Ui au I ka vai Wai hui hui o ke ani ani Vai hui hui o ke ani ani